A very good evening, ladies and gentlemen. We are back with yet another exciting session on your favorite topic, technology as an enabler of internal audit process. Over the years, I have started feeling myself as a jockey, radio jockey, and trying to, because this program has got tremendous popularity. We started with some 1,000, 2,000. Last session, the number of hits were more than 8,500. And at the end, when the session ended at 9 o'clock, there were more than 7,600 participants glued in. I live upon the promise I made to you when I was given this board. In fact, let me tell you that I joined the council way back in 2004. And at that time, Shri Sunil Kaur was the president who made me the founder chairman of this committee, which ultimately turned into the board. I promised that we'll be passionate to give you best of the speakers. And in fact, Mr. Paul had come very recently, but still I requested him because numbers of members were telling me that they wanted how practice could be created, what are the areas in IT where they can venture. And in my wildest of thoughts, I could not find anything better than Mr. Paul, a person who has always dedicated his life in practice and knows the ins and outs of this profession. Madam Pusha Lemay, again a very enterprising young professional, totally attuned to internal audit. I also have my very dear friend, younger brother, CA Vinay Jambal, who is the Honorable Chairman of Jammu and Kashmir branch. 6 foot 2 inch height hai meri. Smart boy. And I have Navodita Arya, a young emerging chartered accountant, very good in communication skills and very keen to contribute for the cause of this profession. So not taking much of a time, I would give the dais to Navodita to take the proceedings further. Navodita, the dais is all yours. Thank you.
Thank you, sir. Thank you.
Navodita, please unmute. Navodita, please unmute. You're on mute, Navodita. You're on mute. Please unmute.
Am I audible? I'm really sorry.
No issue. Please carry on. No issues.
Thank you for your kind words, sir. Good evening, all the participants, all the panelists, and my fellow members, and all the viewers who have joined us on YouTube. As the world faces the unprecedented times of global pandemic, I wish you all good health and pray for all our well-beings. There is a very famous quote by Mr. Peter F. Drucker. We accept the fact that learning is a lifelong process of keeping abreast of change. And most pressing task is to teach people how to learn and cope with the changing times. Well, we can say this, that these kind of virtual learning sessions of ICAI help us in upgrading ourselves with the difficult times. Today, we have one such excellent program on technology as enabler of internal audit, which is organized under the guidance of CA Shri Charanjot Singh Nanda sir. These programs are regularly organized by ICAI on every Saturday. Today and the last week program being the exception to be organized on Monday. Change is the essence of life. Be willing to surrender what you are or what you could become. Let us all go home more enlightened today. With these lines, I would like to welcome CA Vinay Jambal sir, who is the chairman of Jammu and Kashmir branch of NIRC of ICAI, to give the opening remarks. Welcome, Vinay sir.
Thank you, Navodita. Thanks a lot.
We are keen to hear from you, sir.
Good evening, everyone, and I hope that you are all in good health in this testing time. As we all know, that today's topic is very important with reference to present day scenario, that is technology as enabler of internal audit. So before we start, on behalf of Internal Audit Standards Board of the Institute of Chartered Accountants of India, and also on behalf of Jammu and Kashmir branch of NIRC of the Institute of Chartered Accountants of India, I heartily welcome our very known intellectual Chartered Accountant CA Charanjot Singh Nanda ji, who is Central Council member of the Institute of Chartered Accountants of India, and he is also chairman of Internal Audit Standard Board of the Institute of Chartered Accountants of India. And I also welcome in absentia CA Anil S. Bandari, he is also a Central Council member of our institute, and he is presently Vice Chairman, Inter Audit Standard Board of the Institute of Chartered Accountants of India. With this, I also warmly welcome CA Pusha Limaya, Associate Professor of Internal Audit, Evolent Health, who is our speaker for the first session on auditing IT controls for non-IT auditors. I also welcome CA Shyam Periwal, Vice President Global Head Internal Audit UPL Limited, our speaker for today's session, second session on fighting frauds with data-driven insights. I warmly welcome CA Naval Kishore Bajaj, who is Head Corporate Audit and Assurance, Yokogawa India Limited, our speaker for third session on changing landscape of corporate and dependence on technology. And I also warmly welcome all the participants present here, who I'm very much sure that with their presence, we are going to have a very interactive session and making the wonderful program. As we all know, that today's webinar, we are about to discuss and are very eminent and learned speakers will guide us on the various ways where we can use technology in the internal audit. And as we know that nowadays internal audit has become more important, and I would say that rather it's a compulsory one nowadays. Now, if we have to audit an entity, we have an audited entity, which maybe whosoever small it could maybe, but nowadays compliance is so much in terms of income tax audit. It could be due to GST audit, GST Act, and Companies Act, and so on and so on. So for all these compliances, you can say if we go once for an audit as a statutory auditor, we will do and check each everything that will be of great risk to our professionals. So therefore, internal audit nowadays has a very important in our audit scenario. For this purpose, hope we can do good intro as a good auditor, as an intro auditor is concerned. We have today such an eminent speakers to educate and guide us for the internal audit, and I'm very much sure that with their guidance, with their today's topic, we will learn a lot about them. We will enhance our skills for the purpose of conducting internal audit. Now, before I conclude my remarks, I request everybody to please kindly take great care of yourself in these testing times that have been caused due to pandemic of COVID-19. Thank you so much. Thank you all of you. Back to Navita Arya ma'am. Ma'am,
Thank you for your kind
you
words,
are
sir.
mute.
Thank you for your kind words, sir.
My pleasure.
Today, we have a distinguished panel of personalities here. It is my pleasure to extend warm welcome to the very respectable and esteemed CA Charanjot Singh Nanda sir. He is the epitome of public personality in our profession, an individual who has affected change. He is the founder chairman of Internal Audit Standard Boards, chairman of the Committee of Management Accounting of the Institute of Chartered Accountants of India, vice chairman of Continuing Professional Education Committee of ICAI, and member on board for 26 committees of ICAI. Under his leadership and guidance, we have been conducting weekly programs. I would now request Mr. Nanda sir to address the keynote in order to commence the session.
Thank you, Nodita. A great session today, very exciting session. And I'll try to be and listen all the sessions today. I'm really obliged that we have best of the speakers, Madam Limaya, my younger brother, and very, you can call, esteemed member of the profession, CA Naval Bajaj, the senior of the profession, CA Paul Jacob Sahab, who kindly agreed to come and speak on a very precarious, on a very, you can say, sticky topic, bringing out all the professional opportunities which practicing chartered accountants or chartered accountancy in industry can have from the technology side of the internal audit. I want to tell you all that the friendship between us has grown manifold. Your numbers increasing every day has given a lot of confidence to the board and given us the right to call speakers who would again be delighted to address a large gathering of close to 7,000 to 8,000 members. If I have to say something on our friendship, I would say, हमारी दोस्ती के दफ्तर में तबादले कहाँ हुजूर. Tabaldi means transfer. I'll give the English version at the later stage. हमारी दोस्ती के दफ्तर में तबादले कहाँ हुजूर, यहाँ जो एक बार बस आया यहीं का होकर रह गया. The English version is that when we become friends, there are no transfers. Anybody who comes and meets us becomes an integral part of ourselves only. So, speaking to the stakeholders of this great profession, the Chartered Accountancy profession, which was set up an Act of Parliament way back on 1st July 1949, when the most important document to the democracy, the Constitution, was not adopted. All of you are well aware that the Constitution to this great country was promulgated on 26th January 1950, much after the setting up of the Institute of Chartered Accountants of India. Yes, we will rise up to the occasion and ensure that our professional aptitudes will be matched with the best of the world, and we will ensure that the flag of the Institute flies at unprecedented heights. Give me a second, I'll put my PPT and just go to my keynote address. Just a second. Is my PPT visible? Navodita?
Yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
Great, great. So we have three topics which will be taken into account today. The first is auditing IT controls for non-IT auditors, taken by Madam Nimaya. Changing landscape of corporate governance and its dependence on technology, taken by C.A. Naval Bajaj. And IT/information system audit opportunities, taken by none other than our star speaker, C.A. Paul Jacob Sahab. So session 1 will speak about auditing IT controls for non-IT auditors. Now, what are IT controls? What you need for IT controls? You need to gather information and plan. Very, very important. Where the information is, you need to collect it, plan it, and use it effectively for your initiatives. Second, understanding of existing internal controls. The control environment prevalent in the entity needs to be understood by the internal auditor, and it includes, number one, control environment. What control environment is prevalent? Control procedures. What are the procedures on which the entire control is working? Detect risks. Risk is a very important area. Detect risk, mitigate risk, control risk, equate risk, and for future, create such a type of paraphernalia that if risk comes at a later stage, it is immediately mitigated. Please understand. A gentleman told me once that, Mr. Nanda, I want to do some business which has no risk. I said, no, God has not created any business which has no risk. The moment you find it, tell me also. Because I want to take risk. Risk and opportunity are similar things. You can never think of opportunity without thinking of risk. But we have to take calculated risks. And that a professional internal auditor will ensure that all such risks are immediately brought before the management, and the management is able to take a call what its calculation is on risk and the level of risk it wants to undertake. Now, what you do in this? You review the IT organizational structure, policies and procedures. Very, very important. Go through the entire literature and resonate to the entire board or to the audit committee wherever you want. Your scope of work, your style of working, and more importantly, the inference you want to draw from these records. Review IT standards and documentation. SA 240, very, very important. Review IT standards. Organization business impact analysis. Yes. What is the impact of various risks on business? What is the impact of introducing technology? What is the impact if we move on in the same old fashion which was there? Very, very important. Very, very important. We have to work on that. Just a second. The next is observe the process and employee performance. All the processes, because I remember a saying which says that no chain can be stronger than its weakest point. The entire process needs to be observed and the employee performance be taken into account, so that each and every performance of employee, we do certain audits, employee performance audits, human capital performance audits, so they are very important. And last is examination of testing of controls. We are able to test the controls and see what is their level of their depth. Very, very important. Now, how do you communicate the results? To address the finding, clearly state the following. Number one, agreement or disagreement with the finding. Whatever findings are brought before you, you need to communicate whether you believe in them, whether you agree or you do not agree. You have to find the responsible party for addressing the findings. The work is through so many processes. So anywhere you find that there is an issue, you have to identify the process head for redressal of the finding, the problem. Clearly defined action that will be taken to redress the finding. Every finding has to be addressed in such a fashion that it is nipped in the bud itself. Timeline of the finding will be addressed in the what time period the finding will be resolved is again very, very important. The second session taken by Mr. Naval Bajaj, changing landscape of corporate governance and its dependence on technology. Corporate governance has become a favorite area of practice of internal auditors. Why? You have to ensure governance. Now, what is governance? Governance is the set of responsibilities and practices exercised by the board and executive management. What is the goal of it? Number one, providing strategic directions. In today's complex world, with so many competitors, if you have to create value and worth in your organization, you need to have strategic directions. You need to ensure that objectives are achieved. The mission and vision of the board has to be ultimately percolated to the lowest of levels by the internal auditor. You all know that internal audit essentially is a management function, and therefore you have to do the work of the management in ensuring that their vision and mission is properly assimilated by people at all levels. Ascertaining that risks are managed appropriately. Yes, risks are always there, but their management, their mitigation, and how much risk you have to take, a clear-cut idea of that is very important. And last is verifying that the organizational resources are used responsibly. Today's industries, the greatest capital is the human capital. Whether they work efficiently, if they don't work efficiently, it is a big blot, a big loss to the organization. Therefore, the performance appraisal of the employees is very, very important. Now, the changing landscape of corporate governance. The corporate governance has been truly evolving in a newer avatar. The board of directors today face new challenges. What are those challenges? Number one, there is an increasing pressure from the public to take socio-economic and environmental responsibility. Apart from TSR, corporate social responsibility, the management has to ensure that there are no environmental hazards, there are no tree cuttings, there are no pollution issues, carbon credits. There are so many host of issues which have to be pondered and taken care by the management. And second, from government pursuing regulatory changes, we are answerable not only to our stakeholders or clients, but equally responsible to the regulators and governments so that there is no compliance or regulatory mishap. Boards are recognizing that governance, risk, and compliance are continually growing in importance, and the responsibility of the board is increasing as well. Yes, the board is becoming more responsible, and its responsibilities would ultimately usher an era where things will move in a very smooth fashion. The importance of governance will continue to increase, and the role of board members in turn will continue to evolve. And in this, technology will be a key tool in handling such changes. Please understand, corporate governance, conflict of interest, they have become so strong today that boards have to be guided by them. Now, technology is more important for improvement of governance process and information sharing because it has red flags wherever it finds that any of the ticks have been disappointed or any areas where the processes have not been synchronized, a red flag will come. Technology often uses the ability to track and manage risks, procedures, and decisions on top of meeting and document management. This can lead to far more clarity and efficiency, not to mention improved transparency and auditability. A total paradigm shift, 360-degree shift, to ensure that we have all the improvised models, the best of the three worlds when we do our auditing. The third session to be taken by Mr. Paul Jacob, a very senior chartered accountant, is IT/Information System Audit Opportunities. Redefining audit function. The relentless transformational impact of IT in this digital era is redefining the IT audit function. What does it force auditors to do? Number one, to question long established practices. How, why, when, under whose instruction? These questions normally the old auditors were not asking, but the new age auditor, the IT auditor has to start from it. Rethink fundamental processes. Every process has to again have the test of the thinking, test of the time to ensure that anything which is redundant is immediately eradicated from the system. Recalibrate their functions for the digital area. They have to hone their technical skills in different areas so as the digital era is taken care of. IT audit opportunities. What are the IT audit opportunities? Align IT audit strategy with business strategy. Yes, when both of them are on a homogeneous platform, the working will be very coherent, very synchronized. Second, take input from business leads on continuous basis. It has become a very challenging fact now. So, input from business leads is very, very important. Third is focus relentlessly on value add to the business and measure customer satisfaction. Internal audit is essentially required because it is a management function which is totally directed towards value addition to the business and ensure that all customers go home satisfied. The fourth is to rectify deficiencies and capitalize on achievements. Yes, all deficiencies need to be plugged, all loopholes need to be plugged, and achievement need to be so showcased that you are able to navigate through all those things. Navigating in such troublesome and challenging times and understanding the ecosystem of the business where you want to excel is a different task. Work to instill new ways of thinking and working through the function. Out of box thinking, something which gives proper solutions and ensures that the management is truly rewarded for its call on internal audit. Make bold decisions to increase the entrepreneur's capability. Enterprise capability is only enhanced once we go ahead and take bold decisions. You can't always remain on the same thought process that was defined. Then, along with benchmarking, value addition is also must to consider. Not only benchmarking with competitors, but value addition at the time where you understand how things can be propagated, how things can be used. So, ladies and gentlemen, I have now broadly taken the keynote address. I would like to just tell you three things before I withdraw. The first thing, times have come when we have to equate our practices with the prevalent landscapes, the prevalent environments. So this brings us to a fact that this pandemic may have displaced no number of practices. So you have to realign your practices with the help of technology to keep on creating value not only for your client or stakeholders, but yourself also. Second important thing, your staff, your resources, their technical competence is very important. We have the recorded version of all these programs. You can write to me, mail to me, WhatsApp to me. Any program recording one would provide that. Please see that not only your chartered accountant, but even articles and employees see the entire process, which is very efficiently outlined in all these programs. And third and final, I want to invite you all, if anyone amongst you wants to become a speaker, if anyone amongst you wants to formulate standards, if anyone amongst you wants to create a system wherein you are able to help the internal audit communities, the Institute of Chartered Accountants of India and the Internal Standard Board through its council member and through its chairman would invite you for your great initiatives. So not taking much of your time, I would now give the dais back to Navodita, but I would like to very candidly put one thing, reassure one thing, that the board is always for you in any time, in any circumstance. The board will never fail in its duty to give you the best, to give you the most scintillating sessions that are possible. Over to Navodita. Navodita, beta, the dais is all yours now.
Thank you, sir. Thank you for your wonderful address. A very important challenge which an auditor has to cope with while auditing the IT controls is the non-IT skills of the auditors. Today, we have a very learned personality to address this topic. Ms. Piyusha Limai, the Associate Director, Internal Audit for Evolent Health. She is a Chartered Accountant, a Company Secretary, and a CISA qualified personnel having 10 years of rich experience in risk management, SOX compliance, internal controls, and IT audits. She has worked extensively with the stakeholders with various business functions and geographies. She is a versatile and financially astute business leader with a track record of driving the global businesses to the new heights. Welcome, Ms. Piyusha ma'am. I request you to kindly illuminate us on the auditing IT controls for the non-IT auditors. Dice is all yours, ma'am.
Thank you so much, Navodita. Thank you so much, Nanda sir. It was a wonderful address, and thank you for a wonderful introduction, Navodita. Am I audible? Just want to check that once.
Yes, very much, madam, very much. Please go ahead.
Perfect. So I'll begin sharing my screen. Just let me know when you can see it. Yes. Is it visible?
Yes, madam, very much visible.
Okay, awesome. So hello everyone. Hello again. Today I'm very excited to be in front of all of you because I'm going to talk on one topic which is very near to my heart, and that is IT general controls. Since its inception, IT has actually made rapid strides and changed the way we look at auditing. Well, this has been very helpful to us in a number of ways. It has given us different tools, different technologies, different techniques by which we can better our auditing techniques. At the same time, it has added a layer of complexity in whatever we do. So today I'm going to take a deeper dive into ITGC controls. Now, ITGC controls are one of the most simplest, relevant, but one of the most important form of IT audits. So I just go to the agenda in brief. Yes. So we have a loaded agenda for today. I'll start with the definition and purpose. Then I'll go on to a couple of roadblocks which all of us, particularly chartered accountants, encounter in IT auditing. The next couple of slides will be dedicated to the structure of an IT system, and I'll also touch upon the scoping and risk assessment. The last three slides, the last three sections rather, will be specifically dedicated to how do we actually audit IT controls and some of the tips and tricks to conquer them. Then I'll talk a bit on key testing considerations, which all of us must keep in mind when we're auditing ITGCs. And the last bit of this presentation will be dedicated to how to deal with an IT control failure. Having said that, I'll just jump on to the first slide. So that is definition and purpose. Now, what are ITGCs? The full form of ITGCs is IT General Controls, and the reason why they are called as General Controls is because they are common across all applications. So you go anywhere in the world, these set of controls is designed in such a beautiful way that they can mitigate all sorts of risks which come out of your IT applications. If I have to elaborate a bit further, I would say they are a set of controls which govern how technology is developed, used, and implemented in any organization. To again simplify it a bit further, I would say they are a set of internal controls which assure the stable, secure, and reliable performance of your computer hardware, computer software, and people, that is personnel. Another distinguishing points for ITGCs is that while I say that they are common across all applications, they are completely different than the ITACs or the IT application controls or the automated controls. This is because of a simple reason that whenever you go in any organization, it has its own processes and procedures in place. There are different thresholds which are followed. There are different workflows which are there in every business process. And that is the reason while ITGCs are common across all applications, ITACs, that is the application controls, will always be different for all the applications. Having talked a bit on ITGCs, that is the core definition, I would now like to touch upon the more important question on why we actually need to audit ITGCs. Why do we need to have a 1-hour webinar on just discussing the importance of ITGCs and the best way to conquer them? The reasons for this are twofold. So on one hand, they help us to satisfy the core IT objectives, that is confidentiality, integrity, and availability. And that is all of us know the typical CIA triad. Confidentiality indicates that only the authorized person should be able to access the data. Integrity indicates that the data should always be in a correct state at whatever point it needs to be accessed. Availability indicates that data should be made available to the people who are designated to do so. Now, these are the three core IT objectives which immediately translate into the business objectives, that is completeness, accuracy, validity, and authorization. Now, why do I say so? So say, for example, you have an IT application or IT system in your organization or your client's organization. There is a report or a data set which is coming out of that application. How do you make sure that the information which is there in that data set, that report is complete? it is accurate, that it has all the information which it is supposed to do, it is valid, that it is the information which it should be at that particular point in time, and it is authorized by the right person. So amalgamation of IT objectives and business objectives, that is the reason we need to audit ITGCs in the first place. And it also wouldn't be an overstatement if I say that if your ITGCs are ineffective, then your business objectives cannot be achieved. Another couple of things I have mentioned on this slide is that ITGCs, similar to business controls, can be classified into manual, automated, preventive, detective. Also, they can be ongoing or point in time. And I'll touch upon the different controls, which I have highlighted in parentheses in the subsequent slides, so I won't talk much about them on this one. Okay, so we saw what are ITGCs, why we need to audit them in the first place. Now let's talk about the more pressing question on what are some of the roadblocks in IT auditing, especially for chartered accountants like us. Okay, so I have highlighted 3 basic roadblocks which all of us might have faced at any point in our careers, whatever be your background. The first one is that we don't have a core IT background. Definitely we have a subject dedicated specifically to IT, but as opposed to our industry peers, say who are engineers or who are into information technology, we don't have hands-on experience. And that is the reason sometimes we falter a bit while venturing into this unknown space or while undertaking any assignment related to IT auditing. The second point is tech savvy. So as I speak, there are 1,000 new technologies being implemented all around the world. And it's very difficult for an individual to actually keep abreast of what all is happening and just to make sure that we are in sync with the latest technology. So that is one roadblock which I think all of us, especially chartered accountants, encounter. The third part of it is complexity. Believe it or not, how much we say that IT is cool, there is a layer of complexity which we cannot overcome at any cost. It has its own world, it is very technical, it is heavily loaded with a lot of information about which we may not have the requisite amount of knowledge. Having said that, these are some of the roadblocks in IT auditing. However, we as chartered accountants, we know our stuff. We know how to actually conduct a robust internal audit. We just have to understand the IT part behind it, and voila, we are completely ready to audit any kind of IT application in the world. Okay, so the next couple of slides, I will touch briefly upon how a IT system is typically structured, and then I will move on to scoping and risk assessment. So this is how a IT system typically looks, and I've tried to simplify it as much as possible. So if you observe in the far right hand side, there is the Active Directory or the network layer. If you venture a bit towards the left, you can see the application which is poised at the center of the screen. Then it rests upon a database which again rests upon specific servers. So these are the 4 components of an IT system which start from an application. So an application is something which all the end users, that is all of us use. So we use PeopleSoft, we use Workday, we use Oracle, and that is the application layer. Now, whenever we input any command into the application, it needs to fetch data from a source. Now that source is the database. So that is the second layer which I'm talking about, and that is the database. Now this database needs to rest upon a server, which again forms the server layer. And the last part of it is the Active Directory or the network layer of it. We as IT auditors, especially while auditing ITGCs, must make doubly sure that considering the risk rating of that particular application, we are actually auditing the controls at each layer in the IT system. And that is one of the key points to note whenever you're trying to audit any IT application. Moving on, as I said, I will touch a bit upon the scoping and the risk assessment. So here is in a brief how we actually scope ITGCs. And the point which I want to drive home is that all of it emanates from the financial statements. And as I said, we chartered accountants, we are pro in auditing financial statements. So you take your income statement and balance sheet, you identify the significant financial line items that is typically dependent on the materiality threshold which you have set for your organization or your client's organization, then each significant financial line item, of course, gets tied back to a business process. So that could be procure to pay, that could be HR payroll, that could be acquire to retire, it could be any business process. This business process again is segregated into two parts. One is consisting of the manual activities and the second is consisting of the systemic activities. So all of the business processes need some IT application through which the data can be processed, and that is where IT general controls come into play. And again, I have tried to make this point very clear that whenever we are auditing any IT application, it should be audited at all the four layers, that is application layer, database layer, server layer, and the Active Directory or the network layer. Okay, now this is one of my favorite slides, which basically talks about IT risk assessment. Now the basic question which comes in all our minds is, why do we need to assess risk? What is the reason for it? So the first reason is that we need to determine the extent of risk which is prevalent in our organization. Once we determine the extent of risk, we need to make sure that we have the right controls in place to mitigate that particular risk or risks. Once that is set, then we can actually finalize our controls for the IT applications. So that is the reason you need to assess risk. And again, risk assessment is a process which will differ from organization to organization. So in some organization, risk assessment may be carried out, say, every quarter. In some of them, it may be carried out, say, once a year or twice a year. So it completely depends on the kind of industry your organization is, and that determines the frequency of risk assessment. So having addressed the why part of it, now we come to the more important part of it. How do we actually perform a robust risk assessment? So there are a couple of ways to do that, but in this slide, I have tried to touch upon a basic risk assessment exercise, which is done in most of the organizations. Of course, there are nuances to it and it can differ from different organization to organization. So typically what is done is, once we begin the risk assessment exercise, we need to define the assessment parameters. So the very first parameter which we need to take into consideration is the process level risk. I have an application Oracle or I have an application Workday. How much of the data in my business processes is actually being processed through that application? So I have, say, 20 defined processes and my data is being processed through Workday for all of the applications. Then for the process level risk parameter set of it, it will get a highest rating, that is 3. And that is something I have made up. It could be 1, 2, 3, 4, 5 or any which ways you deem reasonable. However, for the sake of this presentation, let's keep it as 1, 2, 3. So it will get a highest rating, that is 3. Then the second parameter upon which you can assess your IT application is number of users. How many users are there which use your IT application? Now, in our organization, we have Workday and there are like thousands of users who use Workday. So automatically it gets the number 3. That is the highest rating possible. As opposed to that, I could say there is an application known as Blackline. You might have heard of it. It is used for account reconciliations, but it is just used by a definite number of users, say 10 to 15. Then in that case, it may get a 1 rating or a 2 rating. Once we determine the number of users, then the second is how many of these have actually privileged accesses. How many of these have privileged accesses? So that is the third parameter upon which we can assess any application. The next couple of parameters by which you can actually determine the risk rating of any application would be, what would happen if the segregation of duty fails in that application? What is the risk I foresee to my financial statements if SOD fails? If it could result into an immeasurable loss, then again it will get a higher rating, as opposed to nothing much can happen. My attention is still be keen irrespective of whether SOD fails in this. Another parameter to note here is changes implemented. How many changes did this application go throughout its life cycle, say for 1 year or so? More the number of changes, higher the risk it is. One of the last parameter which I have noted here is issues. was there a failure related to that particular application in the previous year? If yes, we'll again get a high rating. Once we have determined these ratings for all of the different parameters, we take the sum total of them and then we assign a risk rating to each of the applications, and then they can be categorized as high, medium, or low. Why we need to do this? We need to do this because we need to understand how many controls related to that particular application we need to test it throughout the year. So if it's a very low risk application, then most probably, and again, this is not a rule set in stone, it can always differ. But typically, we do away with the user provisioning and deprovisioning. We completely rely on the user access review. As opposed to that, if it's a application which has been ranked as high, then we need to make sure that we perform all of the different controls at all the different layers, which I described in the previous slide for that particular application. Okay, so we discussed about IT risk assessment. Okay, now comes the most interesting part, and that is introduction to IT controls and how to conquer them. As I described, as I've been trying to describe in the previous slides, ITGCs are very important. We as chartered accountants do face some roadblocks in them. And in these slides, I've actually tried to address each of these issues which we face and ways and means to conquer them. So there are fix of roles on which IT is categorized. They go from IT governance, access management, change management, IT operations, key custom reports, or IPEs, that is the information produced by entity. All of these controls taken together into consideration, they will help to mitigate all the risks which emanate from your particular application. And as I said, the crux of these different controls remains the same. However, the procedures, the processes, and the specific nuances related to them might change. So I'll jump on to the very first control set, and that is IT governance. So what is IT governance now? So IT governance is nothing but a set of policies and procedures which is set by the board or the executive level people, and that the basic intention of doing that is to make sure that the IT assets can provide maximum value to the company, that is the organization, and its stakeholders. It basically defines the tone at the top, and it basically defines the IT landscape upon which everything in your organization is going to be based. Whatever is decided at the top, be it policies, be it procedures, be it the different organizational structures which is decided, then that has a downstream effect on how your organization looks up to IT. So one of the best ways to conquer that is read the policy documents and understand what they're trying to tell us. And I would say IT governance is one of the most easiest part because it's basically related to understanding of the policies, understanding of the standard operating procedures, the different IT organization which are set for that particular organization. So it's pretty easy to understand what IT governance is trying to tell us. However, another trick which I use normally in my stints with different audits is engage in conversation with the key IT personnel, because you can gain a certain amount of knowledge which is much more than which you could gain by actually reading the documents. These people are the governors of your organization and they are the ones responsible for governing IT. So whenever you talk with them, you actually get an understanding of what is to come when you actually begin testing the ITGCs, that is the IT controls. So engage in conversations with them, try to get an idea of what is coming in for you, what are the key risks which the organization perceives, how is their response to emerging risks. You will get a knowledge of all of this when you actually take a deeper dive into the IT governance part of it. The next set of controls are related to access management. And again, this is one of the simplest set of ITGCs for the reason that all of us are involved in this access management controls at some point or the other. And I'll explain this with the help of some examples. So whenever you join any organization, say you are a new employee and you need access to Oracle, then your manager will actually raise a request for you and you'll get access to Oracle. As opposed to that, if you're a people manager and if you need to raise requests or you need to gain access to your team member, you'll again follow the same procedure. You will reach out to IT, you will tell them that, hey, I need access for XYZ for this particular role. So here, whenever we are a part of, we are auditing access management controls, the key here, and that is the way I learned, is to ask more questions. So whenever you are granting access or you are being given access, the question which you should always be asking is, hey, I got X access for, say, invoice processing. Why did I get X access? Is there any reason why I got this X access, and what are the privileges by which I can actually do something in that accounts payable system? When you start asking these questions, then automatically you will get more answers and more understanding of the entire process. And this brings back the point that how do I conquer it? So get involved in the process. Provisioning and deprovisioning, you already know what is happening. It's what you do on a regular basis. You just need to understand the IT part of it. When you are granting access to your team member or when you are being given access, ask the question that, hey, is there a role dictionary defined for this? Which basically states that these are the 10 roles for this application and these are the privileges which they have by which they can do only this much. Say, for example, you left your organization and the new person who comes into your place, he doesn't have adequate knowledge of that application. How do you make sure that that person is giving the right kind of role to your team member? And here is the question which you ask, that how do I make sure that the right access is given? And the answer which you got is yes, you need to have a role-based matrix for user provisioning. The second question which you might ask in this is, okay, I gave the access to that person. Throughout the year, that person might need some different accesses, right? Accesses don't remain static, they keep on changing throughout the year, throughout a span of different years. How do I make sure that the person doesn't have any access which gives him the authority to actually do more than what he's supposed to do? And the answer you will get is, okay, I need to have another matrix defined specifically for this purpose. And that brings me to the next point, which is segregation of duties matrix. So you define the role-based matrix by just asking a simple question. You again came back to, yes, I need to have a segregation of duties matrix defined. Again, you got another answer, or maybe I would say another testing attribute or testing step. So here we have conquered access provisioning. The next obvious part, which all of us have experienced throughout our lives in different organizations, is access deprovisioning. You leave an organization, your access gets removed. How do you actually do that? And I'll again touch upon this, taking both the examples, both sides of the story. So you are an employee and you leave the organization, you submit a mail to your manager, and your manager takes care of the next. As opposed to this, you are a manager, a team member leaves the organization, again you send a mail to HR and HR will take care of the next steps. The question you need to ask here in this case is, what happens when I submit a mail to HR? What actually happens? HR typically should inform IT. Someone from IT should go into that application and manually deactivate your team members or your access. Now, this is a very simple procedure, right? It's a very simple procedure. I inform HR, HR goes to IT, and IT deactivates your access. However, it is not as simple as I say, and you may not believe it, but in some of the organizations which I have audited, people were not terminated on time for the simple reason that the manager didn't inform HR and HR didn't inform IT. So how to do away with this problem? In this way, you need to have certain flowcharts or standard operating procedures specifically related to access deprovisioning, which can actually help you, which can actually streamline the entire flow and make sure that whenever a person is supposed to be terminated, he indeed is terminated from the IT system. So this is about deprovisioning. If you have to dig a bit deeper, you need to ask another question. Does the IT person go manually and do the process manually, or is there any sort of automation which happens in this case? If it is done manually, it is fine. It is, I would say, one of the most common practices. However, an ideal practice would be to have an automated job, which basically has a downstream effect on all the applications through which the person is a part of. So here you have conquered another testing attribute. You say the access was removed on time. You have established a process of doing that. You have also described the techniques through which it could be done. Another part of this, and it's a very interesting example which I would like to give you. In many of our organizations, typically, you must have observed that there is a single sign-on technology that you don't need to input your password multiple times. All of your password is related to an Active Directory. So you just need to enter your password once. When you log on to your network, then you get access to X number of applications, which are basically tied to the Active Directory. Now the next question should be, okay, the access to an application was removed only for that application. But hey, that application is Active Directory authenticated. Have we made sure that Active Directory is also deactivated? So these are the questions you actually need to ask. More questions you ask, the more answers you will get, and that will basically form the crux or the basis upon which you can define or base your testing attributes. The next part of access management controls is user access reviews. And this also is very common. You might have experienced it. You receive a mail from IT that, hey, 5 people from your team have access to X application with Y roles. Do you attest to that or can you confirm to that? You say yes, then things are okay. So user access controls, I would say, is one of the most simplest controls just because anyone can perform it. However, gathering the right data for it is a interesting process and sometimes could also get complicated. So that is how user access is regulated, and I won't touch upon more details on it because in the subsequent slide in the testing considerations, we are going to talk much more on the user access review and some of the best practices to conquer it. The last but not the least part of access management is the password parameters. Again, a very simple, again, a very basic control, but you need to make sure that you receive the password alerts to actually change the password on a periodic basis, and that again depends on your organization. It could be quarterly, it could be monthly, it could even be annually. So it depends on how your organization functions. But you need to make sure that whenever the passwords parameters are implemented for a particular organization, then they are following the password policy which is set in place. This is a very common ITGC failure which I have noted in my stints with various organizations, that the policy is mandating, say, different parameters, and what is actually being followed is something different. So that brings me back to my first point about IT governance, that the policies and the procedures which are set at the top and which eventually govern what your organization's IT should look like, they should reflect the actual procedures happening. And that is why it is very important to actually keep on updating your policies, procedures, and revisiting them on a periodic basis. So that is all in access management. We have the provisioning, deprovisioning, UARs, and the password parameters. The next set of controls or the next control is change management. Now, change management is, I would say, one of the controls which is quite technical because it's not easily understandable to us as chartered accountants. However, the good thing about change management is that it is heavily process driven. So there is a set process which happens and that usually doesn't change in any organization. So user requests for a change, a person develops the change, someone tests it or QA it, and then someone else deploys it to production. So it's a set of procedures which usually doesn't change in any organization. You just need to make sure that all of this is being followed. So there are two key points which are related to change management. First is approvals. You must make doubly sure that the approval matrices which are elaborated in the change management policy, they are typically called the CAB, that is a change advisory board, they are being followed in the actual procedure. And many a times it happens that a person leaves the organization, his name is still there on the CAB, it has not been updated, and another person is actually approving the change. Nothing wrong in this case, but again, it results into a mistrust or a misalignment between what is supposed to happen and what is actually happening. So one of the first points to take care of in change management is to make doubly sure that the approvals are happening as mentioned in the change advisory board. The second point, and again, one of the most important attributes of change management is segregation of duties. There should be segregation of environments, and that is the development, testing, QA, and the deployment environments should always be different. And typically what happens, I mean, again, my own observation, what happens is this happens in principle. So when you're actually doing a test of operating effectiveness I'm using a SOX jargon. So it happens in a test of operating effectiveness. You notice that there is indeed segregation of environments which is happening. However, if you take a deeper dive and obtain the list of all the people who have access to these specific environments, then you notice that, hey, there is a problem. The same people have access to all the three environments. So this you need to make very sure that segregation of duty is imbibed or embedded at the test of design level itself, and then automatically it will flow into the test of operating effectiveness. One simple way to conquer change management is you start from any change which you yourself observe and which is relevant to you. So say for example, you use a report and one day you notice, you use a financial report and one day you notice that there have been made certain changes to the report. Your question should be, who requested the changes? Once you take a step backwards, you'll be able to understand how change management actually functions. And that is the way to learn. I mean, you take a change which is relevant to what you do, and then you actually talk with the people who are responsible for actually developing the change, testing, QAing it, and deploying it. That is the way you will learn. And again, as I said, ask more questions. So why segregation of duties? What will happen if segregation of duties is not maintained in this case? Is it possible that one person could kind of make unauthorized changes to the application or the database? Well, yes. What if approvals are not given? What if approvals are given by the wrong person? Again, could result into unauthorized changes. So yes, more questions you ask, more answers you will get, and more answers you will get, your test procedures or the way you're testing things will become much more defined or refined. Okay, so moving on, IT operations. So IT operations is one of the most interesting part of ITGCs, I would say, and they relate to job scheduling, job monitoring, system backups, and all of that. Again, a simple way to conquer IT operations is understand the why behind the IT operations. Why do I need to test it? If that is the question you ask, the answers you will get will help enhance your knowledge in a very large extent. So say for example, again, to give you a very basic example, I am a business processor or a business auditor and I receive a set of claims or I receive a claims report from X system, which is my claims processing system. Okay, that's good. My next question should be, how did the claims get inputted into that system in the first place? Did they get inputted to the data warehouse or were there like say 5 different sources through which they got inputted? The answer which I will get will help me understand that, hey, there is a job which runs from the data warehouse to my claims processing system on a daily basis. My next question should be, what will happen if that fails? What will happen if the job doesn't function for a day? Is there any kind of restoration technique which makes sure that within 5 minutes the next job will run to ensure that the business operations are not hampered in any way? So now you have two important attributes. You know what is the flow of the data, you know what is the job which does it, you know the frequency of it. You also made sure that if the job fails, you have another control in place. So here you have your entire gamut of the testing attributes for job monitoring. And that is why those are the questions you need to ask whenever you're auditing any process, especially job monitoring. You start again, as I explained in change management, start with something which is very relevant to you. Start with, as I said, a claims processing process, which is like really relevant to you and of which you understand everything about it. Also, another thing which you could keep in mind is, and this is similar to my previous slide, wherein I described that you need to engage in conversations with the key personnel. So engage in conversations with them, talk with them, understand from them what are the critical jobs. What are the critical jobs? So critical jobs typically are the jobs. If they fail, then there will be a massive disruption to the business operations. What are the controls these guys have in place to actually mitigate those? So if you ask those questions, you basically know the why behind why the job monitoring or job scheduling is important. The next set of control is on the system backups, and which is a very simple, I would say all of us have been studying it in theory since our CA days. So that is a very common kind of scenario which we encounter, that backups need to be taken. Now again, if I go back to my previous slides, as I said, everything we do in IT general controls, each and everything we do in IT general controls basically emanates from the business processes. So if I say it emanates from the business processes, then it brings me back to my in-scope applications. So I have say 10 in-scope applications, and I need to assess them on a periodic basis to make sure that the database servers which are actually related to them still stay the same. And this is a common phenomena which usually happens in organizations, that they decommission one server, a new server has been brought up in its place, and we as auditors, we fail to see that just because the risk assessment or this constant revisiting was not done on a proper basis. So that is something which you can definitely do. And then the next question to ask is, hey, how frequently are these backups taken? So then you will get the actual schedule. So that is the screenshot, or you can actually observe the person doing this. You can observe what is the schedule of that particular backup. Then the next part is actually understanding whether the schedule was followed. So if it says that the backup must run, say, every Friday, do you actually have the backup logs to support that? So the schedule says on Friday and it runs on a Thursday. What is the reason to do? What is the reason for this? Once you start again asking these questions, you will get the right kind of answers upon which you can base your testing. So these are some of the IT operations controls which I say are easy to understand, maybe easy to audit, but a bit tricky to understand. So more you engage in them, more you should be able to actually conquer them. So the next set of controls, or I would say one of the most relevant controls which all of you would be able to relate to, key reporting or the IPE test. Again, if I go back to my previous slides, I described the business objectives. I talked about companies, I talked about accuracy, I talked about validity, and I talked about authorization. Relying on fixed set, which is coming from an IT application. How do I make sure that the data is complete, it is accurate, it is valid, it is organized by the right person? And that is where the key custom report testing, or the IPE, that is the information produced by entity testing, comes into play. Whenever there is any change to the report, you must make sure that it follows a robust change management process. And again, we know how the change management process operates. We know the key attributes which happen in that. So you just need to make sure that all these attributes are fulfilled, and that any minor change to the report goes through the change management process before it is actually deployed into production. So that is one part of it. And another best practice or a tip to conquer is, if possible, for your applications, try to obtain the audit trail and the report definition. So the audit trail basically elaborates what all was done for that report, and kind of change actually step in a format easily understand. Ask question that what about this change? Did it go through a change process? If yes, show me the document. If no, what was the reason for it? So once you obtain the audit trail, things become much more easy. However, it may not be possible for all the applications. It is possible in some of them, but not for all. Another thing to check is to review the report definition. So whenever any complex report, it has a fixed set of columns, then it has certain filters which need to be applied, and it has all the different peculiarities. So the thing to see is, you take the audit definition, the report definition for one period, compare it with the report definition for another period, and basically try to understand what were the differences for it. So say for in this month's audit definition or report definition, there were 10 filters applied. In the next month, I observed 15 filters applied. Then my question should be, what happened to those extra 5 filters? Did they change? If yes, documentation. Basically, the report which you stay words and make sure that report is in front of you has really all processes. Now, this is talking about the report which is output system. However, the report apply certain manual processes to it. These are also very important to the IT component, which we will be auditing via the report definition, the audit trail, and the change management process. At the same time, we also need to make doubly sure that the manual processes which are applied, so it might be something very simple as a pivot table, or it could be something much more complicated. We as internal auditors, we as auditors of IT general controls need to make sure and need to actually document that in such a way that it's very clear on what procedures were followed, whether they were adequate, and whether they satisfy the business objective. So that is all about key custom report, and that brings me to the end of the IT general controls and how to conquer them. As I said, the specific nuances or the procedures might be different all over the world for your applications. However, the basic crux of ITGCs always remains the same. And the more questions you ask, the more answers you get. You just have to understand the IT part behind it, and then you're all set to audit any kind of ITGCs in the world. The next couple of slides, I have touched upon certain testing considerations, and this is based completely on my hands-on experience or what I've observed throughout my tenure till date. So one of the most important points which you need to make sure whenever you are again auditing any IT application is that the data should be complete and accurate, similar to what I described in the previous slide. How do you make sure that the data is complete and accurate? And the easiest way, and I think the safest way is to do that is to actually extract the data yourself. When you're extracting the data by yourself, you're inputting the specific parameters, you're running queries, and you're getting the data. So there is no question of doubt that the data could be hampered in any way. That is the easiest way to do it. However, that may not always be possible. So the next possible option is to observe the IT people running the query, inputting specific parameters, and then take screenshot. And then you also have the Excel or the Word or the PDF output, whatever it is. So that is the second option. If both these options don't work, then the last option which we have with us is to actually take the proper screenshots. So make your IT people aware of what kind of screenshots you need. That should specify the query, that should actually specify the row count. What I do or what I suggest to my clients is you take the first, the middle, and the last row of that particular data where you're taking the screenshot and then compare it with the output which you have got. So you can be at least reasonably assured of the accuracy of that particular population set. The next point is for evidence for point-in-time controls. So some controls are there which are pretty time sensitive. So I would say backup schedules or job schedules or password parameters. For all this, you need to make extremely sure that the date stamp is illustrated whenever you take the screenshots. The last part of this slide is dedicated to the user access review controls. As I said that I'll be touching upon user access in intricate details. So user access is one of the most important controls because it is a catch-all control, as I said before. Even if you are provisioning, deprovisioning phase, it is the last safety net by which you can actually catch whether the users were not terminated on time, whether they were given any wrong kind of access, and all of that. To make sure that your UAR or user access review functions properly, the first point to make sure is that all accesses should be reviewed. And this looks like a very simple point, but when you dig a bit deeper, there are certain loopholes to it. So you need to make sure that all the users, may they be users of your own organization, they could also be external users who have access to your application. All of them need to be taken into consideration when you are performing a user access review control. So that is the first, that is the most important point. The second point is that responses should have been received from the relevant reviewers. And when I say relevant reviewers, it could be anyone. It could be a manager who actually gave you the access in the first place, or it could be an IT application owner who knows that yes, X person should have this kind of accesses. So you need to make sure that the right people actually audit the accesses, because many a times I have observed in various UARs that people just approve just for the sake of it. They don't have any knowledge of it. They don't have any knowledge of the nuances or the problems which could happen. They just blindly approve it. So whenever you are actually doing this user access review, make sure that the right people are approving. Another funny point to note here is that sometimes, and many times it happens, that a user approves his own access. So that should never be the case. It should always be approved by another person, as I described before. So whenever the basic crux of UAR is whenever you're auditing a user review list, you need to actually state your approval or just say that yes, this person's access should be removed or this person's. So whenever any such kind of change is defined or made by the reviewer, then you as IT auditors must make sure that is actually implemented. And the option of doing to obtain the list, to observe in user access review day and in the user access review list from now, and just observe that whatever changes actually been defined, they are being implemented or actually implemented in that particular user list. That is one short way of doing it. Another one that is service accounts or accounts, and that happens whenever you're auditing say an active directory which is like 5,000 users, because all the users in your organization have access to Active Directory. So in that case, you need to make sure that accounts are well defined. They're defined the reason for having place that should be defined. Then a specific group of who actually have access to operate, their accesses should be properly reviewed. That is important. The third point to note here is that it's good to actually have a log of all the activities which these service accounts are doing. So service accounts are headless accounts or system accounts, which are a bit different from the user accounts. So it's important to pay special attention to them because they are a soft spot for infiltrators to penetrate your network and your system. The same point in conjunction to that is the stale accounts or the accounts which haven't been used, say, for 90 days. Then all these accounts need to be removed because again, they are not monitored and are a spot for infiltrators to come into your account. A pro tip which I would like to give for auditing user access review, especially where there are a large number of users, is to use a good tool for actually doing the testing, because this helps to segregate the different kind of users who have access, and it will help you to have better control over the user access review activity. Okay, so the last slide which I have talks about the root cause and impact analysis of ITGC failures. So we talked a lot about what are ITGCs, the best way to conquer them, certain key considerations. However, another important point remains that, okay, I did everything I could, the BPOs did everything they could, but the ITGC failed. What do you do in this case? In case of any failure, the first step always is to ensure that the incorrect accesses are immediately removed or the users are terminated. So before you do any kind of impact analysis, that should be the first step you do. And that seems again like a very obvious point, but I've noticed that many auditors don't do that and actually go on performing the impact analysis, actually not focusing on the problem at hand. So that should be the first thing which you do. The next a couple of things which I would like to discuss in this case and related to access provisioning, user access review, termination, change management, job monitoring. So all of these are related to the controls which we studied or went through in the previous slides. And the crux of all of them is that you need to identify the transactions which are processed with those incorrect accesses by the incorrect user as a result of an incorrect change management, or in case your job monitoring didn't fail, then what was the business impact? So ultimately, all of these failures boil down to what impact it has on the business. Once you understand that, once you understand the materiality of that, then you can say that, hey, even though the control failed, it didn't touch upon any of my financial information, and hence there is no material misstatement on my balance sheet income statement. It is a low risk observation. So that is how you drill down and actually ask a good questions to ascertain the impact. So I can take an access termination example. So a person's access was supposed to be terminated 1 month back, it got terminated today. The next question I'll ask is, when did the person last log on? Okay, the person logged into yesterday. What applications he accessed? He accessed many applications, but none of them were related to my financial ERP. Immediately, the risk rating for that particular application, for that particular observation goes down. As opposed to, yes, he did process X transaction worth $10 million for that when he had that access, which he was not supposed to have. Immediately, the impact of that observation goes up. So that is how you actually drill down, ask the right number of questions, and come to a common conclusion. So that is how you tackle root cause impact analysis for any ITGC failure. So that concludes all what I had to do. I would just like to leave you with a couple of parting thoughts. And based on my own experience, it has been a joyride auditing IT controls and doing all sort of wonderful stuff. And I think, like many of us, I didn't start with IT auditing. I was an internal audit, then I did a lot of business controls, and then I made the shift to IT auditing. But whenever you make this shift, it is an absolute pleasure to understand how IT and business work in tandem with each other. And the knowledge and the experience which you gain by doing this is tremendous. So, all of you folks who haven't really taken a deeper dive, who haven't taken a jab at idea auditing, I would actually urge you to go ahead to make that stint, to enjoy whatever you are doing, because there's a wonderful world out there, and not necessarily need to have a specific certification for it. You just need to have an inquisitive mind. You need to ask the right questions, and you're all set. So thank you all of you. Pleasure interacting with you. Thank you so much. Okay, I'll stop sharing.
Thank you, ma'am. Thank you for an enlightening address.
Thank you.
With the points addressed by you, we surely be benefited in the audit of IT controls. Well, the times are changing, and so is the technology. Keep up with the changing times, we need to adopt the changing technology in every aspect of life. Our next speaker will enlighten us about the changing landscape of corporate governance and its dependence on the technology. I would like to welcome the very knowledgeable and respectable Mr. Naval Kishore Bajaj, Head Corporate Audit and Assurance for Yokogawa India Limited. He's a chartered accountant, a certified internal auditor, a certified information systems auditor, and forensic accountant holding FEFD certificate. Having worked with multiple industries such as automation engineering, automobiles, IT, ITES, telecom, FMCG, and foreign exchange, he has extensive experience of 15 years. He has been a guest speaker on the topic related to economic policy and corporate governance on various reputed forums such as Indian Institute of Corporate Affairs, ICAI, ICSI, BBSS Economic Think Tank, and many more. We wholeheartedly welcome you, sir, and request you to kindly provide us insight on changing landscape of corporate governance and its dependence on technology.
Hi, thank you so much, Navodita, for a wonderful introduction. And I have been listening to Piyusha's session for some time. It was very interesting. I thank Nanda ji and Shailesh ji, Vinay ji, all from ICAI for giving this opportunity to me to share my views with the CA fraternity. I must say that at the end, what Piyusha was mentioning, that IT and business go together or go in tandem. There was never a time earlier than now where this statement is so much true. And going forward, in fact, it may translate into not in tandem, but they have to go with each other compulsorily. Because without IT, business will not be able to do anything. So, with that note, I would like to now just introduce a little bit the topic that has been assigned to me. The topic, friends, that I'm going to talk about is changing landscape of corporate governance and its dependence on technology. Before I come to my presentation, I would like to just explain a little bit of context behind this. I would like to initially share what my understanding about corporate governance is, because there could be different meanings assigned to this term by different people. And then subsequently, we'll also talk about what is already existing in terms of automation technology part and what is there to come. So you may expect some kind of a science fiction which is going to happen in next 10 years, which we are all going to be part of. So let me just put up my presentation. Just give me a moment. Is my screen visible, Navodita?
Yes, sir, it is visible.
Okay, great. So, friends, let's talk about corporate governance. My understanding about corporate governance first. I have just tried to put a very complicated slide to make your life difficult. But I just wanted to give you an impression that I know much more than you. But don't worry too much about it. I'll explain the slide. What I'm trying to show in this slide is what is the different kind of interrelationships that various stakeholders of corporate governance has with respect to each other, as well as with respect to the regulator or the legal position. Why it is important to understand is that unless and until we understand this typical structure, we'll not be able to know how the disruptive technologies are going to impact this structure, or maybe going to impact this structure, because it has not already happened, but it could happen. So starting with the top, as you could see in the chart, we have regulators, Ministry of Corporate Affairs, Reserve Bank of India, other regulators as per the applicable laws. Various companies have various specific laws applicable to them depending upon the business that they are into. So all those regulators are responsible for oversight on the individual company, and then we have below them is company's shareholders who have invested money into the company. Company shareholders are actually appointing the board of directors, who are entrusted in an agency relationship, I would say, to run the show, to manage the company. Now, but if they entrust the board of directors with the responsibility to run the company, at the same time, there are various checks and balances that have been developed over many years of the past, which make sure that board of directors deliver their duties or function properly as per the requirement of the law, as per the expectation of the stakeholders. If you also see, we also company shareholders are also appointing statutory auditors, that is again as per law, and statutory auditors are keeping a check not only on the board of directors or the managing director or whoever is the CEO or the senior management, but also they are responsible to report directly to the regulators in some of the positions. On the left hand side, you see there are a lot of subcommittees of the board, means people within the board of directors. Some people within the board of directors will be also given additional responsibilities, whether it be the audit committee, which is responsible to keep an oversight on the functioning of the board, whether it's nomination and remuneration committee, which is again mandated by law. Nomination and remuneration committee is evaluating or appraising the performance of the board of directors, all the board of directors, and then also approving their managerial remuneration as per the stipulations given in the law. Stakeholder relationship committee, again, this is a committee mandated by law, which is having a specific mandate as per the Companies Act, reviewing certain activities of the board of directors. Corporate Social Responsibility Committee, looking at how and what kind of activities under CSR being done. Then there are other committees also, which I have not mentioned here, which will be specific to only listed companies, for example. And then you can also see Enterprise Management Committee, Crisis Management Committee, etc. What does this signify? This signifies that although entire responsibility is on the board, but there are specialized people within the board who are looking at specific functions in addition to the overall responsibility or oversight. And then the entire board is actually approving the strategy or giving the instructions to the top management, which we can say managing director or CEO. And then through that individual they are actually getting things done by the top management of the other senior management of the company, like the business unit heads or the enabling function heads. If you also see, internal audit is third line of defense, as all of us know. So in addition to what statutory auditor is keeping an oversight and regulators are keeping an oversight, internal audit is also keeping an oversight on the first line of defense and the second line of defense, and also reporting their results back to the executive management as well as to the some committees of the board, including the audit committee. Friends, why I shared this in detail was there are certain things which I wanted to highlight in the current scheme of corporate governance structures which are there in our companies. Number one, what I wanted to say was that there is an element how we are trying to manage corporate governance is by an element of trust or goodwill based on the human management. Basically, someone is sitting up there monitoring another human down there, and that person is again monitoring another person on the left hand side or on the downside. But basically, we are managing humans. Why we are managing humans? Because there could be conflict of interests, and as long as the motivations are not aligned, and motivation can be positive motivation, negative motivation. As long as the motivations are not aligned, the organization objectives cannot be achieved. So that's why this structure has been made in a way which ensures that everyone works in tandem with each other. There is another element to this structure which shows that there is a distributed responsibility and power so that the relevant accountability can also be ensured. How that will be ensured? That will be ensured through different policies, procedures, standard operating procedures, different directives from time to time, not only by the regulators, but within the company as well. And then the effectiveness of the compliance to all of this has to be ensured by an effective flow of information. Remember, my friends, we are talking about technology session today, and right now I mentioned about flow of information, and we are talking about information technology. This is the most critical part. The structures may be well designed, the responsibility, accountability may be well designed, but if the information flow is not there, organizations may not achieve their objectives in a proper way. Just imagine an organization distributed over 100 different countries, having 50 different kind of businesses. How do we expect the board of directors to make prudent decisions unless and until the flow of information is apt, is concise, and to the point? So the more complex the business of the company is, the better the need, or more important is the need for better flow of information. And this is why I say, going forward, or maybe even now, businesses cannot move without technology. And that applies to audit as well. We are part of business. We are not aloof from business. If we will not adapt ourselves, we will perish. Let's go further. So friends, what do we mean by corporate governance? After discussing the structure, is basically it's the board of directors monitoring and influencing the strategy. In one line, very simple line, I didn't want to keep it very technical. But whatever board of directors are doing or responsible to do as per the law or as per the expectations of stakeholders, I call it corporate governance. So what it means is day-to-day tactical administration and implementation is not part of corporate governance. Yes, it is one element which supports effective corporate governance, but that should be called as internal controls, not corporate governance. Some people term corporate governance as the quality of disclosures or annual reports. What is the quality of disclosures by the organization, whether there are any fraud risks, etc., etc. But ultimately, it comes, when we say corporate governance, it comes to board of directors. Now, Piyusha was making a very good and detailed presentation on IT governance. I saw this term there. So friends, I would like to clarify that sometimes IT governance is also used for day-to-day or policy and administration and implementation processes also. And she rightfully used that term, IT governance. But I would like to clarify that we will stay with the board of director concept for today's discussion for my session. Let's go further. Now let's discuss, when we talk about changing landscape, we have to definitely first know what is already on the plate, what is already happening. So I thought to bring to the table about my limited knowledge on what is happening around, what is already there in most of the companies. First and foremost, before I get explanation into this slide, when we talk about the board of director responsibility, whenever I have in my personal experience asked any board of director that what are your priorities, the first priority they say is, I don't want to go to jail. So from that perspective, I have kept compliance management tools as the first point within the automation. So most of you will be aware, but still in the interest of this presentation, compliance management tools means there are tools which have been implemented by organizations wherein they list down all the possible applicable legal compliances to the organization, which is a mammoth task. But companies do it. There are specialists available who provide these services. Once they are all listed and applicability is ensured, they are uploaded into the automation tools. These tools are, and then for each of the compliance that is applicable, they will assign an owner and a reviewer or a responsible person. The owner will be like person in charge who is going to do tactical work on that particular compliance. And the person the owner will be maybe the department head or the division head. And what happens is the tool keeps reminding you about, this is the time you have to file your return. This is the time when, you have to maintain your certificates, you have to renew them, etc., etc., etc. Whenever there is a change in the law, then that tool gets updated by the service providers, and then a certification is again sought from the individuals who are responsible to ensure compliance. How it helps the boards is that they are able to demonstrate or they are able to relieve themselves that, okay, fine, if we are going to sign the board report and if we are going to sign the annual accounts, we are sure that there are certain people who are responsible for these compliances. There is a framework which is in place on which we can put some reasonable reliance and we can sign this. Especially when we talk about independent directors, because they are not part of executive management, so they might not know efficiency or effectiveness of the controls. So they put a lot of reliance on these kind of compliance management tools. And this is why you see a lot of audit committees asking for this in the organizations which do not have compliance management tools. How it helps is, first of all, in my own experience, a lot of organizations, even very mature organizations, once they implement these tools, they are able to realize many statutory compliances which they never knew. So they were always complying with, Provident Fund, ESI, contractual obligations, Companies Act returns, etc. But there are a hell lot of environmental laws which might get overlooked. Just as an example. And a lot of times they are unaware about the local state laws which get missed out. So this helps the company person in charges as well as the senior management, as well as the board. But here we are talking about the board. So board is very keen to have these kind of tools in place so that their personal liability is taken care. So I was attending one board of director conference very recently, and almost all of it was a round table. So almost all of the people agreed that as long as there is a very accepted position in law that as long as board of directors have taken the prudent calls, they have given the right level of instructions, and they have placed their reliance on reasonable controls with reasonable level of information that has been given to them, they will not be held liable for any wrongdoing which happens. I'm talking more from the perspective of independent directors. So this explains this automation, why this has come and why it is already very popular, and now I think even smaller organizations are going for it. The second tool, which has also been in place for last entire decade, I think, is the BI tools, business intelligence tools. They have been the demand not from the independent director side, but more from the executive director side. They give you an idea about your operations. They give you real-time data. They tell you which geography is doing better than others, which product is doing better than others, where we have a problem, where we have certain delays. So they help in proper root cause analysis and also going a little deeper dive into the operations. So very popular tools, but they depend from industry to industry. An automobile industry tool will be totally different from say an agriculture based product industry or an FMCG industry. So they have to be customized, but yes, platforms are similar. How it helps the board of directors, not only from the executive director side, but also independent directors, it gives an assurance that, okay, the right level of information is flowing. Whether the business intelligence tools are able to give the right level of indicators to the executive management so that they can take the right decisions. And believe my word, I have done a study myself, and I can tell you that the companies which go bust due to bad strategic decisions are much more than companies which go bust because of frauds. As chartered accountants, we are all very fond of talking about frauds, and same is the case with me. But the fact remains that if the strategic decisions are gone bad, then even if you have the best of internal controls in place, the company is going down. So this is why these tools are very important from a board of directors angle. Then we talk about continuous auditing, continuous monitoring tools. All of us internal auditors, we love this, right? So I will not get in detail into this, but there are tools which help tracking certain particular kind of transactions on an ongoing basis. They throw certain red flags based on the predefined criteria that we would have defined into the tools. And then out of those potential red flags or what we call positive cases, then you have to specifically audit them and identify whether they are actually certain errors or anomalies or just a false positive. So this has been in place again for last decade, and a lot of companies which have a lot of data-driven businesses, especially telecom sector, insurance sector, financial services sector, they already have this. Your FMCG businesses, they have these kind of continuous auditing, continuous monitoring tools. Even very simple example, A very simple example of a smallest level is like a very renowned pizza delivery retail outlet. Based on their past experiences, they have worked out in each geography what will be the delivery cost per order. So if the delivery cost per order for a particular month goes beyond a particular level, they start an auditing of that. So this is just one very basic example. There are much more complicated, scenarios to be built. Another example to give is an automobile manufacturer, who is based in Gurgaon, sends sees in the auditing tool that a truck which has been dispatched on day one and was supposed to be going to Chennai has come back into the system for reloading within 2 days, which is not possible, right? Chennai will take at least 10 to 12 days, 13 days. So these kind of, just an example. So why boards prefer these kind of tools is, it again, it enhances their level of assurance, level of reliance on the controls, and it gives them better confidence. Then vulnerability assessments on cyber security and other IT controls. Friends, I must say that this is already there. People are still talking about, we should have it, but most of the boards are already doing it. Simply because of all these ransomware attacks which have happened, which stopped the factory lines of many renowned companies. Many companies had to pay hefty ransomware money to get their data back or ensure that there are no legal issues arising out of breach of their data. So boards have actually become very careful about cybersecurity. But then cybersecurity in itself is a big word. Now, cybersecurity could apply to your internal IT systems. It could apply to the systems that you are deploying at your customer side. It could apply to your factory instruments. It could apply to your computers, everywhere. Wherever there is a software, there is a cybersecurity issue. Wherever there is a software and there is a equipment which is linked to external network beyond your organization, there is a cybersecurity issue possible, cybersecurity risk possible. So, getting vulnerability assessments and all that, it has started, I think, 4 or 5 years back, and it continues. They are keen to know that, okay, they have the right level of IT controls, and I'll not get deeper into it because I think Piyusha covered it very well. Then we have risk management tools, audit management tools. So risk management tools, so how to explain it? So they help company to understand the impact on their forecasts, the annual forecast or the budgetary forecast or monthly or quarterly, whatever, depending upon the organization. There is always a forecast in each organization. These tools are helping through various, algorithms, formula, whatever you can say, in identifying how much will be the impact of this risk on the total forecast, what is the level, what is the probability, etc., etc. So, as you are all aware that Companies Act asks our audit committee to specifically evaluate the risk management systems of the organization. This is why these tools are very popular within the audit committee. And the first thing that they ask is to form a risk management committee, enterprise risk management committee. But once that has been put in place, they definitely ask you to go one step further and implement some tools which can give the risks not only from top down but also from bottoms up. Bottoms up means, just as an example, in an IT industry, there are projects. In a particular project, there will be a budget, there will be a revenue budget, there will be a cost budget, there will be a time budget. And if any of this is going beyond expected budget, then project manager already knows it. Now just imagine that there is an IT company of say 1,000 crore turnover, and a project manager is handling a project of say 50 crores or 60 crore revenue, if this project manager already knows that there are significant delays, plus there are liquidated damages associated with the contract, which is up to 5% or 7%, the project manager will anyways know it. But will the board know it? The board will know only when there are systems in place to ensure that. What I mean to say is, unless and until you have a process, you have these tools wherein project manager is required to report these kind of things, he will not report, because no one likes to break bad news unless and until the culture of the organization is very good. So these tools actually help them in bringing up this information to the board level so that the right level of countermeasures can be taken, because board of directors are definitely much more experienced and much more resourceful than this project manager. So bottom-up risk management approach can be ensured through implementation of tools as well as processes, but tools play a very good role in this. This is why board of directors recommend this, and many mature organizations have already got it. Then we have audit management tools, because as chief audit executive, audit committees have been asking me also in terms of how many issues are there, what is the trend, what is the nature of issues, what is the timeline of closure, etc., etc. So they want to know the effectiveness of the internal audit process as well. So if I simply give them an Excel sheet based presentations, that is fine. But if there is a tool, then definitely it gives more reliability to the reporting and more assurance, or better assurance. Last, robotics process automation, machine learning enabled process audits. They are also there. Already many companies have implemented. Many companies have automated their SOX testing or IFC testing using robotics process automation, basically by developing some very simple pods which pick up one information from here, another from there, matching it, saying it, okay, fine, this control is meeting or not. So that brings a lot of efficiency already. These things, but if this is being done for SOX or IFC, you will imagine that level of interest that board of directors will have into this. So this is why this is the last but not the least item I'm putting on the table. So guys, this is what we already have, but this is all automation. I don't call it disruption. Why I don't call it disruption? Because it is just improving the way we have the organization structures, we have the law we have. It is just improving the efficiency of whatever structures we had. It is not going to change the way the structure is. But my friends, there are already technologies in place, which I am sure all of you have heard about, which are definitely going to even change the structure going forward. Let's talk about that. What are these disruptive technologies? Big data. I'm sure you've all heard about it since 2012, 2011. I've been hearing about that since then. But what is big data is nothing but basically this is a technology to analyze unstructured data available from multiple sources at a time, and that also in a way that can make a lot of sense for the decision making. So earlier financial data was relating to assets, liabilities, equity and income. Now you can add on consumer preference data, marketing, social media data, production and investment data all into one place, and then analyze what is the valuation of this company. Just imagine the level of information that is available to the investors now. And just to give you one very small example about big data versus Hippo. Hippo means highest paid person's opinion, which means the senior most guy prevails in the boardroom. Let us just imagine that someone in the board asks a question that how much is the impact on the forecast of your company due to COVID? I'm sure everyone will be blank because no clear answers are around. But someone very senior in the room could say, okay, it's going to hit 10%. Then the cross question comes, okay, why it is going to hit 10%? No, because I feel so. I feel that it is going to implement like it is going to happen like this, and so many cases are going to be there, etc., etc. Now, if you're just listening to me, are you getting some kind of confidence? The answer will definitely be no. But at the same time, if we have a tool, if we have a technology which tells us, this is the COVID model, this is the algorithm, this is the criteria based on which we have worked it out, and we believe based on the calculations done that so and so is going to happen, this is the time to peak, then it will subside, this is the death, this is the lockdown, this much supply chain cost, etc. is coming up. Based on that, I have worked out, and I have worked out how many days of lockdown is going to be there, how many supply disruptions are there, how much cost will be impacted, how much additional employee welfare cost I'll have to implement. All that if I'm going to say, then you might feel some confidence about what I'm going to talk about. This is just one very recent example of how these technologies are going to change the existing structures. And then if I tell you that it is not driven by one person, but rather if we have a tool in place which is available on the mobile phone for all of your board of directors looking at the data on a real-time basis, then it might not even need a meeting, right? Meeting will only be to discuss the countermeasure or the mitigation plan, but not on how much is going to happen and what is going to be the impact. So that is disruption. The second example is about investment decisions on valuation, sentiment analysis. We can see crazy valuations for various ventures which have been picked up. Why is so? Because they are not only looking at the current valuation as per the balance sheet numbers, but they are also looking at what is the predictive, what are the predictions going forward. How they are looking at that. They are not only looking at financial data, they are also looking at what people are talking about in the social media about that company, how much usage is happening, what are the trends, what are the consumer behavior, and based on that some kind of valuation is being arrived at. Again, algorithms. So this is already happening. This is the disruption. So if any of us would have already studied investment management, there used to be some very, very clear models about how to value a share, and we have also studied that in CA courses. But those models are no longer 100% efficient. There are many other things which are already happening around, which the analysts are already using. So another disruption. Now let's come to AI and machine learning. An example of that is an automated invoice processing. The vendor is sending invoice. It is going to one place, being scanned from there, automatically going into the system. System is analyzing the invoice because it is in a standard format, converting it into the field data or the database information, putting it into SAP, getting it processed, and even the payment is happening. And this has been happening for many years for a leading automobile manufacturer. Otherwise, how is it possible that you have thousands of vendors and you are able to make the payment within 1 week or 2 weeks to them? Just imagine the level of impact that technology has on your capability to negotiate. If you are able to make your payments on time every time, and that too very quickly, you can definitely get a very good discount from your suppliers because they know that this guy is reliable. So the moment you improve your reliability using technology, your cost decreases. There is a clear benefit. At the same time, using this machine learning or artificial intelligence technologies, it is not that automatic processing will happen and we will not be able to find the red flags. Looking at the past history of errors, looking at the background and multiple other information, we can certainly devise additional checks for certain specific parties or certain specific locations. So that again helps you in improving your checking also as well as your normal processing. You will not trouble 80% or 90% of the people which are genuine, and just focus on the 10% which could be bad. I'm not saying which are bad. Let's talk about blockchain, another big disruption. I'm sure most of us have heard about cryptocurrencies. So cryptocurrencies, my friends, Bitcoin, everyone has heard. Some people asked me a few days back, is it legal? It is not legal, but it is not illegal in India. Because there is no law which has prohibited it. There is no law which has accepted it. People are using it. Already people have invested into this. But I can foresee that this kind of technology, blockchain technology, is going to change, and someday it is going to come that regulators have to find out a way how to deal with this kind of technology. How it works is there is no central Reserve Bank of India managing this. Basically, there are distributed controls, different people sitting across the world. And once that entire ecosystem accepts something, then only the transaction happens. And in a very democratized way, in a very distributed way. In going further slides, I'll share some more examples about blockchain. Sharing economy, Uber, Ola, we have all seen the impact of Oyo rooms on the industry. I don't need to explain much. So just imagine if you are sitting on the board of a company, then will these technologies not bother you or change the way you think? Yes, they will do. The last point in this slide is on smart contracts. So smart contracts, the only thing about difference between contract and a smart contract, I would say, is in a contract, you do the contract, you do the transaction, and later on, while making the payment, etc., you are checking the compliance to the contract terms. In a smart contract, because it's all automated based on technology, there is absolutely no scope of going beyond. So what I mean to say is, if you take an example of, say, if you have taken a YouTube premium subscription or an Apple Music subscription, or for example, if you have put an auto pay instruction into your Amazon, right? The moment you buy these services, there is a clear, standard terms and conditions, right? And the moment you get these services or goods, you will pay. And there is absolutely no possibility of default on your side, right? Just imagine a situation of 2002 when Reliance Industries launched the mobile phone, very cheap mobile phone, along with calling services. People took it for 500 rupees, did talk time of say 10,000 rupees worth of this, and then dumped these mobile phones somewhere else. Is it possible now in current scenario with the latest technologies? The answer is no. So computer has made us more disciplined, and this is what I call disruptive technology. So earlier, as a board of director, I'll be worried that, okay, if you are going to give put so much of capital expenditure into these mobile phones, which you are going to hand over to someone or a customer, what is the possibility that it will come back, not come back? How much provision you have done for that? How much it should be taken care of into the annual report, etc. But now I may not worry that much. Yes, risk will always be there, but see the change that the technology has brought in. Guys, what I mean to say here is that in the start, they always, these disruptive technologies, they always suit more to the newcomers instead of established players, as they serve a different segment to start with. So I'll explain this, but what I mean to say here is that these disruptive technologies will not be adopted by the main players to start with. They will always be adopted by someone else who is looking at a different segment, and later on these big players will adopt them. Now, this is just one statement by a renowned guy which says that just imagine that instead of CEOs or senior managers, going forward, we might have a situation where the delegation of authority is written by the software codes, and the validity of economic transactions is not verified by employees, but it is done digitally, and there is no headquarter or subsidiaries of a company. Just imagine a situation. Now, some predictions. Number one, big data is going to strengthen the financial reporting measurement processes as per many experts, including some accounting profession bodies also of international stature. It is bound to reduce the scope of the statutory auditors to provide an opinion, because if everything is going to be done in a very democratic manner, in a very distributed manner, the reliability of the books of account which is generated by blockchain itself is going to be very high. So the level of checking might reduce, the scope might reduce, or it may alter. And therefore ICAI may also at that time need to change the standards. And for internal auditors, my friends, as I already discussed, continuous internal audits, audit trails, account analysis, everything is going to change. One big change is from possible change of future is to shift from double entry bookkeeping to the triple entry bookkeeping, which means that recording of transaction will be done by each party on a shared blockchain ledger, which cannot be changed by anyone. And participant in the transaction will confirm the integrity of the transaction. It's not that I am booking my own books, the other guy is booking their own books. It is a shared ledger. That guy is doing his own entry, I am doing my own entry. So it is already validated. So no point of doing a vendor reconciliation or a customer reconciliation, right? Blockchain is also capable of handling or keeping the share ownership, the equity shares ownership, which is a very important document as per MCA. Right now, a lot of effort goes into managing this, but if it is used through blockchain as per experts, it could change the whole scenario. But related to that, the laws will also need to change. Just imagine if we have the balance sheet and the profit and loss account ready, not monthly, but every day because of the blockchain. It is possible. Segment reporting linked to the customer feedback, if we are able to give to our board, imagine the level of better decision making that our boards can do. And my friends, let's talk about some things which are already there. Peer-to-peer lending, if you would have heard, it is already there. Without financial institutions, people are able to lend to each other using a platform in a very reliable way, because the platform is neutral. It is just linked to your credit rating. Looking at the credit rating, microfinance reliability can be ensured, and it is already very popular. Crowdfunding is already being done. So crowdfunding means funding some startup or new ideas by many people across the world who feel that the idea is very good. My friends, Jobs Act is a good example in USA, which has relaxed the reporting and SOX related compliances on these ventures which get this kind of crowdfunding. So already I can demonstrate to you that these kind of new technologies, this crowdfunding is nothing but based on new technologies. They are able to change the laws of the country, like USA. It's going to come here in India very soon. And then these all things are going to change the way board of directors are looking at and approving your board reports and financial statements and everything. Same is the case with apartment and house renting, ride sharing, car sharing, co-working. I will not get into that because it's self-explanatory, but last I would like to explain a little bit more. Industrial automation to industrial autonomy. This is the new concept. It means that earlier the factories and the manufacturing concerns, they used to have, and they still have, systems which are there in the factory, for example. Like let's take an oil refinery. A lot of things have to be monitored by the site in charge supervisor sitting there, that what is going above, what is the heat, what is the level, what is the level of pollution that is happening, what is the generation that is happening, a lot of parameters, right? And there are complex systems in place to manage that. Now, reviewing those things was never so easy. Now, those systems which are manufacturing, hardcore manufacturing monitoring systems, industry automation systems, are being linked to the cloud services. And the senior management is able to see them on mobile, which was never possible earlier. Now, a lot of things which individuals used to do, which were very hazardous or, risky from a safety point of view, they are being done using the robots sitting very far away in a very remote location, very safe location. All of this is also being monitored at the board level, because all of this, one refinery is such a huge asset in a particular, oil and gas company. It's such a significant asset. You have to report how you are managing these risks. So when you show them and you demonstrate them how you are going to do it, the level of assurance increases and the risk decreases. So this is why it's very important, the new technology. So guys, towards the end of it, putting an end towards the end of my presentation, the key message that I wanted to give was that current situational analysis is that, lack of information or inadequacy of information results in bad strategic decisions or non-identification of frauds in a timely manner, or ineffective audit committees or auditors, and multiple regulators also fail. So the requirement here is reliability and comprehensiveness of information for risk management, democratization of information in an open source to the level of confidentiality available. I mean, all those plus and minus to be taken care. Ensuring the right culture and audit trails. So my point here is that regulations will also change over a period of time, but the time has come where we need to understand and equip ourselves with these changes. I'm sure I would have raised many more questions in your mind with my session than what I have answered, but that was my objective as well. So with that note, thank you very much, guys. If there is any question, I will be happy to answer that.
Yes, sir. Thank you for an illuminating address. I'm sure that with the points addressed by you, our audience will now be having a better understanding of interplay of technology and corporate governance.
Thank you.
There is an important information. Due to some medical emergency, Mr. Shyam Periwal could not make up for the session. Pray for the well-being of Shyam sir and his loved ones. We have a knowledgeable speaker to guide us on various opportunities available in the field of IS audit. Our next speaker will enlighten us on the opportunities available in the field of IT and IS audits. I would like to welcome the very learned Mr. Paul Jacker, sir, Director Information Technology and Risk Management Services at Messrs. C&K and Associates LLP. He is also the Independent Director at Panasonic Carbon India Company Limited. He is a Chartered Accountant by profession, holding Diploma in Insurance and Risk Management from the Institute of Chartered Accountants of India. He has served as Chief Technology Officer at Royal Soft Services Limited. He has very vast experience of serving various industries like manufacturing, service, industry, and many more. He has 40 plus years of teaching experience on various subjects, including finance, IT, computer applications, and programming language. He is a member of ICAI and Institute of Internal Auditors. We extend a warm welcome to you, sir, and request you to kindly address our audience on opportunities available in the field of IT and IS audit.
Thank you, Mayur. I'll take over the screen.
Yeah, sure, sir.
What I'm doing is I'll quickly run through a few of these things we have put together. Now, the topic is, what opportunities would an auditor have? As you know, there's nothing called an ITIS auditor today. It was long back. Many years ago, we used to have separate auditors, but today things have got overlapped. So we need to So we need to understand the technology to keep us going. So what I'll do is I'll quickly start off. I just have a few things I put together. I think I'll just go straight to my slide. I got 18 points here, so I'll just go quickly. We'll finish it up fast. Now, here what we want to notice, of course, we had our earlier speaker talk to us on IT general controls. There are 10 domains in the IT general controls. Okay, now why? Okay, before I start the areas, I should first tell you, there was a time when we could strictly talk in terms of a statutory auditor was very powerful, an internal auditor was not so powerful, or it was partly employees, partly outsourced kind of audit. And then we had a system auditor who came in for small functions and very small, tiny jobs and went off. But then over the years, things changed. So what happened was the statutory auditor, maybe lack of skill, maybe let's say he didn't want to take the responsibility. He told the internal auditor, you give me certificates on certain things, including asset verification. And one of the things included was these IT controls. And then some time later, they spoke about integrated audit, where the auditor knew both the financial and the IT components of it. He audited around the computer, through the computer. Okay, there are a lot of things we went through, the CAT tools and etc. And then today we reached a stage when we are asking people to sign. There are certifications to be done. It is not enough if you simply say it's working or not working. They'll ask you to put a signature at the bottom of that document. Now comes the real problem. Are we willing to take up these challenges? Once you sign, you also know you're under the normal company law and the laws of the land. And some of the laws also have arrest provisions. So those who are jumping into the IT audit will face the same responsibility as internal auditors. There's no separate responsibility. And if you're taking up high-level certification, passing certain exams, and taking up higher-level certifications, then obviously you're taking up a higher level of risk. Now, why I started with that is because sometimes we see these tenders where an IS audit, somebody quotes 5,000. He has no idea going to jail will not only cost him 5,000, the policeman itself will take the 5,000 as the bribe. So it's just not worth it. So you need to figure out the fee you're getting is mainly for your knowledge and for the risk you're taking. So it's no way less important than all the other audits you're doing. So when we look at IT general controls, what are we talking about? We are talking about people who are dependent on the IT systems and they are not sure whether they can trust it. It is something like getting a certificate for your vehicle or maybe send it an authorized service before you start a long trip. So you just want to make sure that everything is safe. There are no problems with the vehicle. So you ask someone to check it. Authorized service gave a certificate. You're happy with it. It's the same thing here. Now, since you depend on computers for many things, the rest of the systems, the production, sales, finance, marketing, whatever they have, and the rest of all the departments, they will depend heavily on the IT systems being in place. Now, these are not the programs. These are things like the networks, people accessing the systems, how changes are authorized. For instance, the newer law, it's not the law, but the newer risk responsibility requires, instead of looking at all the changes and seeing whether they're implemented, you have to see all the changes in the software and see whether they are authorized. Generally, questions are asked, how do I know what they changed in the software? We have to use tools. So throughout this session, we have to use a lot of tools. I'm not actually gone into the tools, but I'm open to questions. We have a lot of software where basically I'm more comfortable with the open source because the paid tools are very expensive. They're used mostly by the software companies. A large industrial manufacturing, yes, they also use paid tools. All the others, generally we use open source, but open source requires a knowledge of Linux or Unix. So these I would take, I'm not going very deep into it, but I would take these as the first level controls where who's accessing authorized changes. Is the software correctly talking to the external software like your RTGS or NEFT or your the customs shipping documents after, etc. Then disaster recovery. Many times you don't know where the recovery is, but we need assurance that the recovery facilities are in place and they will work. Now, for instance, your mobile phones, they say backup something on Google, we don't know where the backup is or something like that. Okay, these are kind of issues. Sometimes it's a gray area, but I'm open to questions. Then IT operations, I'll go into detail. Physical security is slowly fading away into what is called cloud-based security, where if you get the audit of the data center, then physical security alone is your audit, 3402 or 402 as we call it. SSA 18, not for the Indian auditor. If you look at the IT system security audit checklist, again, if you see the list, we are looking at most of these would be based out of audit trails. Audit trails are logs, LOGS. Now, all of these will happen at some point in time. They are programmed, they all take place by themselves. But we need to check the logs which are generated. The logs are extremely important because you can data mine the logs, you can look for patterns, maybe you can just look for complaints, test complaints also, that's fine. Those are doing the bank and IRDA, it's not a very stringent requirement, but those are doing industrial and a lot of intellectual property is involved and those kind of things. We have to be very careful that we are not missing out anything. Even a single incident has to be reported. Now, if you go to the cloud or the what I'm calling as outsourced or co-located servers, machines are put in somebody else's data center. We may know, we may not know where the data center is, or we outsource the entire job itself. I mean, somebody's doing the payroll, somebody's doing the accounts and so on. Now there, the audit report generated by the auditor of this location is called a service audit report, SAR. We have some auditing standards on it, or we call it as, we can call it security operations or service audit, service operations certificate. If you are talking SOC, then we have the usual type 1, type 2, which is the financial controls is, SOC 1 is financial control, SOC 2 is rest of the system control, SOC 3 is of course a web trust and safety on the web. Type 1 is at a point in, type 1 is for a point in time. Type 2 is for a period of time. So if you go through these, India also we have, it's SA for us, SSA is not for us, that's for the US requirement. CPE can sign this, Indian auditor can sign this. So what we are looking at is, in this thing, in these outsourced locations, who's monitoring, how are they configured, we can't go there. So we depend on the auditor who is there to give us all this information. So if you are an internal auditor for one of these companies, like let's say if you are BSNL or IBM or a lot of small companies also running the servers out of Pune, Hyderabad, Bangalore, you'll have to follow these standards and get the audit done. Is it an internal audit? Yes, it is. It's in fact the SA is an standards and auditing is, though it's for the statutory auditor, they take these reports from the auditor who's doing these audits. Now, web security audit has become very, very important because most of the interfaces run on the web. What are interfaces? Like earlier, you install software on your machine to access something like SAP or okay, even smaller things. But now most of them just run it out of their browsers in their phones, tablets, computers. So what's the risk of something going wrong? Remember that the end user is now going to go via a web page or via a web browser to a web server, then to the application server. In between, you have a lot of people who try to steal and make trouble. You got cross-scripting. You got people who do buffer attacks, stack overflows. Now the question is, what does the internal auditor have to learn about all this? There are two ways. One, you could learn the core technology, like you learn journal entries and you're good at accounts. But the other side is you can just use a package like Tally or QuickBooks. So we'll go with the package route. What we do is we use tools. So tools will give us some information. Only thing we have to understand what the tool is saying. So today we can analyze code, handwritten code, or computer programmer written code. On the web pages, we can do that for the applications also. And whatever vulnerabilities are thrown out, they have to be addressed. That's actually called an application security audit. But we are concentrating on the web first because the web has got a much bigger, almost every company has a web page, and that's where the hackers start with their social engineering. They try to pick up information from there. I guess we do that even when we write our proposals or somebody wants a tender, we go and try to scrub the web page to see what we can get out of it. So here again, it's the same thing, risks being exploited, the prevalence of risks, these are more like inherent risks, and whether we can detect it or not, and what happens if a vulnerability is not identified by the auditor. In fact, in the CA Institute ethics, now we have that NOCLAR. It's a liability for the internal auditor, but anyway, the note says not yet applicable, but you need to take insurance. The internal auditor needs insurance if he's an outsider. Cyber security is something which has come up now. Mr. Bajaj also told us, and all these various problems. For ransomware is the usual problem because we are not updating patches properly. But what happens is there's a lot of vulnerabilities which are introduced. What do we mean by vulnerabilities? It's like somebody stealing a vehicle. He knows how to open the door, he takes it off. But if you make it very complicated, they simply disable all the systems, put the vehicle inside a container and steal it. That's how sports cars are stolen in Europe. So today we find thieves. Sometimes they may not even attack your system. They create a mirror image of your system there before they study it for a few years. And they create mirror images, attack it properly, and then in one swift move, they do whatever they have to do. Mostly it will be siphoning money or locking up the data. Now this again, of course, we have got all these audit methods to be followed. We have to use a lot of tools. Open source is Kali Linux. It comes with almost 1,000 different tools for different things like packet analysis, for snooping around, footprinting, enumeration. So we need to look at all this because there are companies which fully live off outside servers like card servers, bank servers, insurance servers, custom servers. All their buyers and vendors are on EDI. Now the company won't have much of paper, so you have to make sure that you're auditing their servers and their connections to the outside world very, very thoroughly. It's an internal audit of a slightly higher technology level of competence. Now, this is at a much higher level. So what you are now doing is you're working for the management, trying to find out what is wrong with the systems. This would be like general controls. Like if you looked at ordinary COSO-based RCM controls, okay, we have a purchase order, we have some receipt, etc. Can somebody exploit it? Is it a vulnerability? Can somebody steal money? So whatever we are doing there, because we have a good knowledge of business process, all the legal reporting, legal requirements, best business practices, same thing here. Only thing is we have to work with best computer business processes, best practices. Can we get enough knowledge on that? Yes, it is available. Is there a course? Not really. Most of them will only teach you how to use the tool. Some courses will tell you what are the risks, etc., but they don't put it together. So this is like a driving school, teach you something, where the roads are. Maybe today we have Google Maps, otherwise you have to find the road by yourself. How to repair a car, that's a separate course. So if you want to become a taxi driver, then you'll have to attend 3 different courses. So it's something like that here. Internal auditors who take up this, in fact, now the Indian rule is, if you want to legally sign a VAPT certificate, you must be a member, you should be accredited by the CERT-IN. Or in some banks, they said you need to get certified by the Aadhaar authority, that UDA, whatever. Now, getting certified by them is a fairly tedious job. They are not accepting course certification. They say you have to be empaneled with CERT-IN. So will this be good for a normal auditor? I doubt it. If it's done for the management, that's fine. But if it's done for certification, you need to get empaneled. The IT infrastructure audit, this is a much simpler audit because it only deals with all these. If you have 1 or 2 engineers in your department, preferably these steps could be electrical or civil. There are standards for this. I didn't overload this with the standards, but we need to, I think I put the standards somewhere. Okay, we'll have to look at the standards. So we have to make sure this complies. See, normally what we do is in the ITGC, which is the first point, we look at is the door closing, is it safe, are the cables in place, is it got flood protection, humidity, etc. All those things, cameras, are there logs to tell us what's happening. But then there are, in fact, India never bothered about these infrastructure standards. But now the government of India in 2020, they updated that document. It's there on MeitY. You can have a look at it. It's still a draft. They're not finalized it. The last draft is 2013, 1-3. They got this 2020. It's still a draft. So not the last draft. The last issued was 2013. 2020 is still a draft. But the standards are applicable because obviously we do business with foreign countries, and they insist that we should be able to work with the safety standards required. So you have to look up those standards. I put it somewhere else in some other slide. So a data center has got a lot of standards, and we have to work with these, including electrical equipment, electronic equipment, fiber optic, false floorings, roofing, humidity, and because a lot of things you'll have to look at. This will be more like a construction audit, an infrastructure construction audit. And today, if you're doing a high-rise or one of these fancy apartment infrastructure audit, it's the same thing. Only thing, data centers are more secure. High-rise buildings, of course, they also have IoTs, and they have those entry barriers. They have security cameras linked for digital image processing. It's almost the same thing, the same standards. Only thing is that standard goes to the building code, National Building Code. These standards are slightly different. We have to go with uptime and ANSI and so on. The application control audit, normally what we do is we look at the screens, we put in data, test data, see if it's processing correctly and so on. But today what you do is you can generate large amounts of data through test data generators, or there are tools available which can test the application itself directly. All the controls on the application, and it can take care of it. Why don't we use tools? Because we have to learn to use them. Commercial tools are expensive. If your client insists on a commercial tool, I suggest you take a 1-month subscription, just use it for the audit and just close it up. Don't buy it. You may not find a use for it again. But if they're okay with open source, then there's no issue on that. Application controls, what happened, there's this big application like core banking system and banks, insurance software, or a logistics company software, or ERPs. How do we test data? Go screen by screen by screen, it won't work. It all depends on the capability of the person checking. So best is to run the tool, automate it, let it throw out all the bugs. Of course, we'll have to use common sense to a large extent, but let it throw out all the bugs, and then you can start working with it. Audit trails for all the data which your tool generated. You can use Excel as a simple analytic tool, or you can use Power BI. Actually, the story behind Power BI is Microsoft wanted to phase out Excel, so they hired this team to build this Power BI tool. But unfortunately, Excel didn't phase out. Too many people use it. So Power BI is still there. It is no limitation on those rows and columns. Suggest we look at Power BI seriously if you're an Excel user. It's free. The desktop version is free. Now, if you're doing an application security audit, you have to use that tool because most probably you're working with machine code. You don't have the source code. You may have, but you may not have. If you have source code also, just put it through the tool. That's a lot easier. Tools can actually work through the code. They can stress test it, load test it. They can break in. They can do buffer overflows, stack overflows. Whatever your checklist says, the tool will do, and immediately you'll know what's happening. You can do your static testing, dynamic testing, assessment report. In fact, you'll get a very technical report. Then you write it out as a normal audit report using your RCM and the standard audit format. Now, if you're looking at a technological position audit, now this issue used to be there, then it disappeared, it's back again. Now, companies want to know whether your level of technology is sufficient for them to do business with you. Let's say we have, somebody said automotive manufacturer, you have some new companies, Korean, Japanese, then you have traditional spare parts manufacturers. Now they say we won't do business with you unless your level of technology is equal to what we have, or what you do is you come into our system and work through our web pages like they do for authorized vehicle service. The vehicle service company cannot have its own software. What they do is they ask them to come to the manufacturer's software for the authorized service. Maybe that's one way out, but if the company feels, look, can you help me out and keep pushing my technology up so it gets accepted, this will become a business process. It's called IT strategy alignment with the business strategy. So I use this technological position, but actually what you are doing is aligning the business strategy and the IT strategy. That is the audit here. System development lifecycle, unless you're working with a software company, you may not come across this. Most of the companies just use ready-made software today. They really don't bother developing software. But if you're working with software companies, these audits, of course, they use a lot of methods, RAD, Agile, software development. They use, you can use a lot of methods here. The biggest problem the internal auditor faces is from the first stage, requirement collection stage, the auditor has to start working with controls, security, and whatever the law says. We have got these IT acts and laws. We have to go with all of them. We have to start working with those requirements. Which means you're a technician, internal auditor, and a lawyer. You have to be all three to get this through. There are a lot of certification audits. I just put a few names: ISO, ICAI. COPC is like the gold standard for these service centers. We also have these ISO 19770s for your software as management. Then infrastructure standards is Uptime, ANSI, and ANSI, BI, CSI, and ANSI TIA. We have an Indian standard. I didn't put it. You have to look it up on Google. Audit frameworks. Of course, we are familiar with corporate. IPPF is IAA. ITAF is also it's a IT assurance framework. There are a lot of these frameworks. In fact, I think there are about 16 frameworks. Maybe someday you could look these up and study them. So as an internal auditor, part of your proposal, you'll have to tell them which framework will you be using for the audit and against which you'll issue a report also. Now, ERP implementation, post-implementation, remediation is running for some time. It's not meeting the requirements. These were standard audits. They're still standard audits. So you have to do the business process. You have to do the ERP requirements, then do a gap analysis, and then you know what is required. The gap is what you'll have to address. They may ask you to give a solution, or they may say it's fine, you don't have to bother about the solution, we'll do it ourselves. Now, business continuity management, again, BCP audits have become a bit more complex because of this cloud and no single backup, because you need to have mirror backups, you run concurrent sites, you have failover systems. So if you see some of the words here, of course, the internal audit catches our eye. But the business continuity is in terms of, because if you fail, for instance, if NBFC is using the RTGS platform of a small bank and they in turn are using the RTGS of a platform of a larger bank, a failure of the large bank's RTGS will bring the small bank and the NBFC's platforms down. The whole thing is gone now. The ECS, money transfers, everything come to a halt. So how many steps backward will you check the business reliability, the backup, etc.? That's a business call. You have to talk to the management of the audit committee, then decide or just point out the difficulties, because I know it's pointing out itself is good enough. They may go for a second bank as a backup tie-up or something like that. So business continuity is not just backing up data, putting one more disaster site somewhere. It's not that. The question is, will the business run? Will your toll gates continue running? Will your FASTag continue being recognized? will your railway reservation systems and the catering which you're ordering your food continue to run? Will your Zomato, whatever? Okay, there are lots of these subunits for all these big companies. Big companies don't do anything. They're just integrators or aggregators. Now, these IT compliance audits, I just put 2 links. Maybe we could just open them. Control. Okay, I'll just click on it. Just open up. Now, you don't have to worry too much on this, but what I want you to see is, now there are a lot of compliances which relate to privacy law. Some of these are not in the specific laws. Privacy law is still a bill. Cybersecurity is still a bill. It's not passed. But there are regulators who have issued it, like banks, insurance, e-commerce, manufacturing, telco. Now, these points here, they're picked up from different acts. They will show you the requirements across different types of businesses. So that is one area which you would like to definitely look at. And the other is, if you look at this blog, it's also another blog, it's on cybersecurity. Now these compliances, you have a look at this information technology, the IPC, then we have the CERT-IN, and then we have the CRAT, then we have the this applies only to card companies, PCI DSS and all their BPOs, related BPOs. Then Reserve Bank of India, okay, RBI, we have the IRDA, we have the DOT, this Department of Telecommunication, we have the SEBI, which is only for listed companies, and they also have the LODR, we have to look at that. And then we have the HIPAA, which is for those who are doing back office or maybe doing 2 things, one medical records or medical insurance, both of which you have to look at. Then SANS 20 is, of course, the American requirement. OWASP is for the web security. KYC, of course, this is for the authenticity of credentials of the person. And KYC is not just for bank accounts. You need it for cell phone connections. I think you need it all over the place now, including a vaccine. You need a KYC. Okay, those are the sites, so that makes some sense. So you could go through them. Of course, there are a lot of compliances. Depend on the IT Act for the major requirements, and all other acts, as and when they get passed, some are passed, some are circulars, we look at those. Now, policy development is a business which you could do. Now, when you are writing policies, SANS is an American Institute for Security. They give a lot of templates. For instance, you have general, you get all these policies. Of course, each policy can open in PDF or Word. You can take it, I had to customize it because it'll be very generic. You'll have to fill in all the company name and the punishments and all those things. So if you look at general, okay, then you could look at the network security, there are policies, server security, there are policies. Take as many of them as you want. Just open anything at random, it's fine. Now it'll ask you, oh, how do you want to open it? Okay, now for instance, I'm opening a database credential policy. We normally take the Word files and edit them. So the Word file will download somewhere. Okay, it's downloaded, so I'm just opening the Word. So you'll have to fill in whatever you need to fill in. So you don't worry about the date. The 2014 is not important. Some of them don't change. Database credentials remain the same. Only thing today what we do is we use a lot of encryption and image 2-factor credentials which are not human based. If it is there, then fine, we use it. Otherwise, don't worry about it. Okay, now what we are trying to do is now we have to come back to our PowerPoint. Okay. So go through these policies. They're all applicable to India, all. But the company may decide some we don't want. Like I don't want a policy for, let's say, network security. It's only a LAN within my organization. But then companies are asking email policies. A lot of policies you need, acceptable use policies and so on. Then we have one thing called the internal audit quality programs. That's audit process has to be checked for quality. Now the IS audit department, maybe you've done this in banks or insurance companies, mostly the regulators based audits. But the IAI says normal internal audit itself has to be quality assured. Something like peer review, like you do for statutory auditors. So the IS audit department, now we're not talking about auditing, we're talking about the audit department's processes being checked for quality review. I said you'll have a lot of frameworks. There should be over 16 frameworks because I vaguely remember that. Maybe there are new standards. We can keep updating as we keep reading. You can, for instance, I showed you one or two of them. That's IDAF, the IPPF, and so on. You can have a lot of those standards. The quality itself will have to be assured. Then you have the network security review. Now, this is becoming important because network as a service is used by a lot of companies, including those lease lines, which you call MPLS lines, or just plugging into somebody's network and using. Audits have to be carried out. You may be appointed by the network company, or if your company has networked itself globally or throughout India, you'll obviously be working for the management. So I just quickly run through the various opportunities in technology which you could leverage to do your internal audits. Now, each of these audits may require some certifications like CISA, CISSP, or CRMA, or CRISCO, or CAA. There's so many certifications out there. Try to hire people who have passed their CCNA or in some. Most of these engineering students may not know much, but you can take them, make them pass one of these exams because at least they'll be useful for the certification side of things. And maybe you will have to build a knowledge bank, which generally audit offices, except the big ones, they don't do. Nothing becomes obsolete because what we taught many, many years ago, 30 years ago, as networking protocols is still the same. So you don't have to worry, nothing will become obsolete. It becomes fancy. So a client-based system then became screen-based, GUI, mouse, then web-based, and tomorrow it may be voice-based also. But the basic software doesn't change. So with that, I would like to bring this to an end and open to all your questions. I'll stop sharing the slideshow. We could go ahead with the questions. I'm sorry, it was a bit rushed, but that should be fine. I'm sure you'll understand what I was saying. So.
Yes, sir, of course. Wonderful address.
Thank you, ma. Thank you. Are there any questions?
So there are questions, but questions are not thrown to particular faculty, but they are general questions.
And before you proceed, Kavadita, let me request all to please put their microphones on mute so that there is no echoing. Should I speak now? Am I audible?
Yes, yes,
Great.
sir.
So first question I would like to take, because I'm receiving so many calls from so many people. What are your advice, Madam Piyusha, Mr. Naval Kishore, Mr. Paul Jacker, on how chartered accountants in practice can improve their service levels, what skill sets are required, and how you feel they should do professional development so as to reach the desired objectives? So we can answer in the order in which we had spoken. We can ask Madam Piyusha to start. Yes, Madam.
Sure, so that's a very good question actually, because practicing chartered accountants, I think, receive a lot of assignments for which they feel that they are not prepared. But I would like to take a cue from my own presentation itself that you take the assignment, you can do the learning later on. So study the policy procedures, engage in discussions with people, talk with industry experts, and learn on the job. So it would be good to always take the assignment first and then learn and then solidify your skill sets. So that is what I also did. I mean, being not in practice, but being in the industry environment. But as I said, all of us have the requisite auditing skills. You just need to understand the IT part of it. So learn on the job and improve yourself. That would be my suggestion on this.
Madam, to take it forward on your end, you are with the industry. So when you give work, what you see in a consultant that calls you that you should have faith in him? What are the credential of a consultant or a CA firm which you see that these are things which I can bank upon and give the work to him?
Sure,
A
sir.
vague idea,
So one
whatever,
thing
what
which
is
I
feeling? Yes, madam.
Right.
Yes.
So one thing which I definitely see in a consultant is, does he understand the risks which emanate from that particular application or process? Because the tips to actually procedures to mitigate that might be different, but as long as an auditor or a chartered accountant or any consultant understand the risks, then he has conquered the first battle. So I consider that a very important point, and then the rest of it comes with experience and expertise.
Great, madam. Great. Yes, Bajaj sir.
Yes, I would like to just say, answer this generally rather than only relating to IT or technology audits. See, whenever I buy a professional service, there are only three criteria. First of all, whether I know that there is someone who can deliver this service. First criteria is whether I know someone. First of all, I need to know someone whether that person is delivering this or not. The second is, can that person deliver this service? So that how I is basically by knowing from market, network, okay, reading his or her profile on LinkedIn, or also, based on whatever presentation that person would have sent me. That is the second stage. And third stage is very critical, whether I can trust this person. So once only these three stages are completed, then I can buy. And yes, it is never a individual decision in corporates. In corporates, it's always a, cross-functional committee most of the times. So what happens is building your brand and, positioning you in a way and getting associated with good brands or network will always be helpful, because what happens is in smaller corporates it may be different, but in multinational corporates what happens is sometimes you have to justify the appointments to the board and audit committee where there are international candidates also. So having some tie-ups with international networks also, which a lot of CA firms have already done in India, I can see that. That also helps in just answering. So I will just give you one small example. My board might ask me, okay, are they having any office in Tokyo? If I answer yes, they are done. So these are my very quick ones. Over to Paul.
Yeah, yes, sir. Because I'll probably look at it from the practice point of view.
One
From
second,
the
Mr. Paul.
practitioners.
Mr. Paul, you have to wait for a second. Mr. Naval, now I want to tell you that the institute has come out with fresh networking guidelines. They are something which all members, because we have close to 600 members who are glued in even now. The time is 8:46. So I want to give an advance to all of them that now networking has been allowed. So you have to set up networks. What Naval said was very clear, that he looks upon a person who has a proven track record, a person who has delivered services, and there are people who can vouch that this person has delivered services. So for that, you can always enter into networks. We have now allowed networks. A person can be a member of one network, and there are various three types of networks where you can enter. I will not take much of the time because Navata is ready with some other questions also. But I want to tell you that the take from what Naval said is essentially entering into network. What Madam Pusha said is essentially understanding the risk perspective, because you have to impress upon the person or to the committee which is able to decide or deliver the contact to you, that you understand what is expected of you. Very, very important. Over to Mr. Paul.
Yes, sir. I'm just talking from the practice perspective. From one is, sir, to choose a particular area and start with it. ITGC, of course, has become general, but if you're doing a network audit or if you're doing a cybersecurity, choose one area and start building a team in the organization, or try to get people from outside, and you can work on some kind of a loose arrangement like a consultant. The second is documenting all the knowledge, because what I find in audit offices is generally the smaller ones, maybe the bigger ones also, attrition rate is very high. So people leave. So we need to capture that knowledge so the client is comfortable. So he doesn't want to tell you the same story year after year and what happened, what's the follow-up, and so on. And technical skills, we'll have to start looking at not just apprentices, but looking at MBAs, lawyers, company secretaries, engineers, computer science students. So we take a lot of these people and we train them in the division. And now we have started training also on data analytics. So, of course, it's a bit of an investment, but it also takes a lot of time convincing your partners. But this is something which you have to do, as there are very senior partners who will have to be convinced. In fact, you may be asked questions, how can you give a fraud risk assurance report? But then audit committee will ask for it. So we have to find methods to do it. So these are the new things we have to learn, sir. And as part of these learning exercises, doing fraud risk assessment or different type of reports, you take the report and make it a seminar. So then we understand how to generate that report. So that's the learning curve which audit firms have to go through. And if we don't understand something, we need the ability to make those who know it work for us. We need to take a businessman's attitude. You can't take an owner's attitude. If I don't know it, you can't do it, kind of. So we got to, let go and use the knowledge, superior knowledge of others to leverage the business. That is okay in the wrong sense, but we have to look at the practice as a business, particularly if you are on a technology side. I don't know whether my advice is right or wrong, sir, but that's needed.
Thank you, Mr. Paul. It was the right solution given by you. Learning is the buzzword. If you learn, you are able to deliver. Learning means knowing. Knowing means delivery. Great, sir.
Yes,
great.
sir.
So we are running short of time. Over to Navodita for further questions. Navodita, we'll have to wind up by 9. So you have close 10 minutes, and at the end we have to do pleasantries for 2-3 minutes. 7-8 minutes you can take care. Please go ahead.
Sir. I have one question from Mr. Kamal Kishore. As a chartered accountant, can we do audits like cloud, web security, cyber security audit, or any other degrees required for the same? If yes, what are those degrees and how can we get those degrees?
Sir, if I can answer.
Yes, Paul.
The very simple answer, sir. The client will specify certain things like you have to be a CISA or a CISSP or something, or an ISO 27000. But if the client has not specified anything, these are not statutory reports. Most of these will be either consumed by the audit committee and the organization or by the external auditor for his comfort. So basically, if you show the competence and sign, they take it. But generally, we'll have a CISA or somebody who can sign it off. But there's no specified qualification in India other than these 3 professional institutes. If you need a legal opinion, of course, we take it from a lawyer. They just brand themselves, cyber lawyer or whatever. So we take a certificate. He doesn't go through a separate course, no certification for him. So I also suggest auditors can do law also.
Thank you for the answer.
Anybody else would want to add something before I add it?
Yeah, Nandaji, I would like to add one thing. So there is, I'm not able to remember the exact law, but there is some law which specifies that companies, either the companies need to have an ISO certification on IT, or they need to get audited at least once a year from a CERT approved IT auditor. So that is in addition to what I think Paul ji mentioned.
Thank you, Navalji. But I want
sir, that is only for listed companies, sir. LODR applies only to listed companies. And if you are listed in foreign stock exchanges, like New York, UK, whatever, then these are applicable.
Okay.
In my opinion, whenever the company wants something, it can always specify the qualifications. But in my opinion, a chartered accountant in itself is a complete degree. So your chartered accountancy degree will empower you to sign any report. But the fact is that if client wants some other qualification, that can be factored in. Thank you. Yes, Navodita.
So next question is from Hemendra Kumar Vashne. How to take care when the data is on cloud? How to satisfy as an auditor that the data is secured and that there is no risk? In case the vendor providing services suddenly becomes bankrupt and is vanished, or the location of the services are in different unknown countries. That's all. That was the question, sir.
To answer that, there are some requirements in the company law. Regardless of where the servers are, data has to be mirrored in India. That is companies. If you're not a company, then that doesn't apply. The second is the cloud company itself will have an audit. That is that SAR I told you, service audit report. And that auditor would have issued a 3402 or a 402 or a SSAE 18 report. And that report will have to be used by this auditor. If this person is the cloud company's auditor, then best is to use the security checklists and the methodologies from CSA. It's called Cloud Security Alliance. The best is to take the data from there and carry out the audit. It's like a normal data center audit, except you won't be on site. Like in this pandemic, we are doing some data center in Ahmedabad. Don't go there, but we're sitting here and doing something. There's somebody walking around with a cell phone, camera, something. So, yeah, that's fine. I mean, that's the best we could do. But anyway, it teaches us remote audit is possible. And of course, you need to run tools. I mean, that I'm very specific. You have to run tools. Simply seeing stuff is not enough. Because, if you study too much, you know how to cheat. So, okay, the tools are same for hackers and auditors.
Naval sir, Piyusha ma'am, would you like to add in anything?
I think Paul sir covered it all. That precisely explains what I had in mind.
All right. So moving on to next question. This is a question again from Hemini Kumar Varshney. How to ensure balance in these times of cloud storage methodology? The company is asking employees to use OneDrive or Google Drive for the individual use and to save the data on common path folder on Google Drive. How to ensure the backup plans? OneDrive and Google.
Okay, you want me to answer? Anybody else? You can answer. So, okay, the answer for that is if you're using Microsoft services, then they give you a drive which is 1 terabyte of space, and that is secured. That is as against your MSN account, your Office 365 or whatever you pay for. That's a paid service. If you're using Google paid service, also it's a secured, guaranteed storage. If you're using free drives like Dropbox, Xbox, Google Drive, then the safety is not assured, and you're not supposed to keep anything there. You're supposed to put photos and the Android apps should be there. It's not meant for business purposes. So if they are using an unsecured free kind of thing, generally that is to be discouraged. Because there's no way you can implement a VPN or anything that doesn't belong to you. It's a free facility which is given. But if you're paid for it, then it's different. If you, as I told you, if you're Microsoft Office 365 or whatever, I mean, if you've got a paid business, then security is assured. Only thing is Microsoft for the mail servers, they are not giving the right certificate saying the mail is definitely mirrored in India because they have runtime dynamic allocation. So it goes to China, it goes to other countries. So what we say is you mirror the mail server locally. It's only an Exchange server, you can mirror it. So, I mean, if that should answer. Free service auditor cannot certify. I mean, how do we do it? Like leaving your car on the road, it gets stolen. What security can we give?
Thank you, sir. Thank you for the answer. Next question is for Mr. Naval. Considering that there are automated tools available for managing and testing the governance, what avenues are available to CAs on designing and testing the governance models? How can a CA contribute in addition to the contribution by these tools?
Especially the one that I'm able to understand the question is related to what I said, that even the SOX testing and IFC testing has been automated. So with reference to that, I understand from my CA friends who are in practice, actually, they have been able to learn how to make bots. They have actually implemented this in their practice. And it's not a very technical thing to learn how to make bots, how to learn, make RPA based bots. A bot is nothing but like, in a layman's language, it's like a macro which we used to have in Excel. But this macro will work in multiple different platforms, not only within Excel, So there are these things available. Course is also available. Without course also, you can actually learn it if you have the interest. And there are very economical courses available to learn these. In fact, one of my friends who is practicing in Jaipur he has actually automated entire ITR filing for his clients, and this bot is doing the entire ITR filing and also sending the receipts and acknowledgement to his clients. He had demonstrated to me actually. So I'm sure that bots can be learned by CS.
And I would like to just add a point over here. So excellent point, Naval. So I think the other side of the table is once you implement a bot, then another thing is you need to understand how to test it. So I think that is also something interesting and something new which all us IT auditors as well as CA should learn. That is another side to it, which is a bit tricky, which is new and which is still evolving. Yeah. Thank you for the knowledge.
Just to add to it, automation anywhere can be downloaded for a 30-day trial. YouTube has got sufficient videos, and you build these bots like you build a flowchart, so the process happens. The other side is a lot of free open source governance tools. One is from a chartered accountant in Kerala, so he, in fact, he'll bug you if you download. He'll keep sending you questionnaires asking you to evaluate it. So, but anyway, it's okay because all of us are learning. So you could look at those free tools, ERM tools, governance tools, compliance tools, and these RPAs. Of course, the licensed ones are 30-day trial. There are free stuff. You can open source. It's called opensourceforce.net. You can get from GitHub. You can take it from a lot of places.
Thank you. Thank you for the answers. This was the question from Sampath Shetty. I hope doubt was rightly addressed.
Navata, we have to because it is 9 o'clock now. So you can take the last question, but we'll have to withdraw now. Last question you can take.
Sir, the questions are almost covered. It's just that most of the participants wants the presentation from Naval sir, Piyusha ma'am, and Paul sir. They all want the presentations.
Great. That will be shared at DLH if the learner speakers want to share it, we'll do that. Great. So anybody would like to add something? Dabalsa, would you like to add something?
Sir, keep doing this great stuff, and we always feel happy to interact with so many chartered accountants. And some of the questions actually give a learning to speakers also. I have personally learned, and in today also, a couple of questions I have noted them down, and I need to study them. So thank you very much.
It was really a very learning session, and all the three learner speakers spoke very well and very knowledgeable. I see that with Chartered One might have learned a lot and do well in our intro audits also. Thank you so much.
Thank you, Dabalsa.
Thank you, sir. Every session I attend fully so that we learn something new from the other speakers.
Great, Paul sir. Great. Madam Pisha, want to say something?
It was a great experience, as Naval rightly said, that I learned a lot from Paul sir and Naval sir, and also from the questions rightly.
Great.
So keep on doing the great.
We shall, madam.
Nanda sir, and yeah.
We shall. It is a mutually beneficial exercise. We all learn from all.
Definitely.
Now at the end, I want to tell you that all good things in life have to come to an end. Our interaction cannot go for unlimited period. It also has to come to an end. But let me tell you, you have to go back home to your children, to your parents, your spouse, all your friends, your profession. Let us remember that the best things we have are our families. So I would like to end with a couplet which says, जरा सी पाने की चाहत में बहुत कुछ छूट जाता है. जरा सी पाने की चाहत में बहुत कुछ छूट जाता है. नदी का साथ देता हूँ, समुंदर रूठ जाता है. The English version is that for gaining something insignificant, I lose a lot. When I support the river, I lose the sea. Yes, rivers are small trivial things which you do, and the sea is your family. Go back to your family, spend time with them. We have done a lot of brainstorming for 3 hours. So relax. Thanks. All the 3 learner speakers, starting from Madam Piyusha to Navalji to Mr. Paul. Thanks to the Jammu and Kashmir branch under the chairmanship of Mr. Jambal. He was there full 3 hours. And thanks to Navodita Arya. Navodita has been an upcoming chartered accountant, and the way she put things forward, I am very confident that she should be sitting in the league of speakers, trying to enlighten the people so that they can go home more enlightened. And thanks to all my dear participants, my dear CA brothers and sisters. It is always a matter of great pride that 6,000 people at 9 o'clock. It's an honor conferred upon me and the entire board, which can never be specified in words. I truly stand indebted to you. Thank you. Have a nice evening. Good night. Bye-bye. Bye.
Thank you,
Thank
sir.
you.
Thank you.
Thank you
Thank
so
you so
much.
much.
Thank you. Thank
Thank
you.
you.
Thank you.